Good morning to one and all. Welcome to the third and last day of the program on GST. Today also, as per our schedule, we are going to have 3 sessions on various topics under GST law. Now let's all welcome with warmth in our hearts and with big round of applause our CAPT Raji. Thank you, sir. Thank you for being with us. Now, on behalf of SSIC, it's my great advantage to take you through the profile of our CAPT Raji. CA Raji PT is a fellow member of the Institute of Chartered Accountants of India and is a partner of well-reputed firm. He is qualified both as a chartered accountant and company secretary, and he also has completed his bachelor's degree in business administration with the first rank from the University of Calicut. He had also secured scholarship from the Institute of Chartered Accountants of India throughout his chartered accountancy course for his merit in academics. He ventured into professional practice after successful employment stints in the Audit Assurance Department of Well firm. He has specialized his practice in GST and is providing GST advisory services to some of the big conglomerates in India, having over 50,000 crores annual turnover. He is a regular speaker in the in-house training of the firm, and he has also presented papers on GST in various business forums and MSME associations. He has conducted many corporate trainings on GST to impart the knowledge of the biggest tax reform in India. So with this, may I request our CAPT Raji to take over, please. Thank you all.
Very happy morning to one and all present here. So I need some response. Yeah. See this presentation, let me tell you, I think, a couple of participants are yet to be joined. So, but, it will be a justice if we start it at the right time. And I want this to be more interactive. And if those people who are sitting in the back seat, if you can come little forward, it would be great. I will not compel, but if you are comfortable, you can come little forward. So, today's session, I have been assigned with 3 sections: Section 15, Section 10, and Section 54 of the CGST Act. Looks very simple, right? Looks very simple. But it's a 3-hour session, and in my opinion, 3 hours is not sufficient. So I will not be able to take you through the complete provisions, but I will be able to take you through the basics. And I will also share a couple of my experience on all these topics that will give you more value addition, and that will be very interesting also. Because when we get a problem, how we are solving it, and how we are applying the provisions, what is the final outcome on that particular topic is very, very important. So today's session, the first topic would be, there are 3 topics allotted to me. One is valuation, second is composition levy, third is refund. So these are all the 3 sections or 3 topics which are being allotted to me. Now, out of these 3, I feel that value of supply is the most important topic, because on a daily basis you will come across these kind of issues. And I also face that a lot of issues I understand that there are a lot of issues, or there are a lot of misconception in the industry as far as the valuation is concerned. So I would like to pluck those, small issues. Like sometimes, out of casual way we use the word stock transfer. But under the GST, there is nowhere it is, for the purpose of valuation, under section, 15, or for that matter in 27, rule 27 or 28, they are not using the word stock transfer. So the industry practices, the moment there is a stock transfer from one state to another state, they are applying 90% of what is the price of that particular product. So everybody started following it. Stock transfer, stock transfer, stock transfer. But when you go to the section, stock transfer is not there. Because stock transfer is not the actual word which is used in the section or rule for that matter. Because of that, everybody started making mistakes. Because the rule says, the goods which are moved from one particular place to another particular place, and that goods should be supplied as such. So if you are using it for manufacturing, rules will be different. If you are using it as such for the further supply, then the rule will be different. So these are all the little misconceptions. I will take you through the complete provisions. The session will be like this. Now it's 10 o'clock, 10:10. So sharp 10:30 or 10:45, we'll be breaking for a tea. Before that, I will complete value of supply. And post that, I will get 1.5 hours. That 45 minutes for composition levy and the refund. And I want this to be very, very interactive. Please understand, you don't have to be so serious about this particular topic. I can see that the faces are staring at me. Every session I used to say, whenever I come to institute, people are so serious. You don't have to be so serious. You will get heart attack, right? Every time, I couldn't see any session where I skip saying this particular topic, particular point. Please smile. You smile, nothing will happen. I used to say there is no smile tax. GST is for goods and simple tax, not smile tax. So smile. Even if you laugh, I don't mind. Even if you sleep, I don't mind. Okay, so I want your inputs on all these aspects. Then only this session will be interactive and value addition to you. Because when you go back, without referring your notes, I want you to take something into your brain. At least when you deal with your clients or when you do the audit, you should be able to correlate. At least the brain should say, no, this is not the right way. Let's go back and then check the provisions and advise the clients. That's the only intention of this presentation. Now, the first topic, the most important topic is valuation. And my session will be like this. Though it is a basic workshop, I don't want to restrict the knowledge to a basic session. I will take you through the advanced concepts, legal frameworks, and Supreme Court judgments, various High Court judgments, AR rulings. I'll be bringing everything into one as a package, and then I will be presenting it to you. Otherwise, you will not be getting a complete overview of what we are going to discuss here. Because I don't want you to come, because all of you are professionals, I don't want your time to be wasted coming for a workshop which should add some sort of value addition. That is the only point which I would like to make. Now, the session overview will be like this. First, we'll take what is the relevance of value of supply, statutory provisions. I will give you a lot of issues which I have come across in my practice, and illustrations, case studies, and case laws. This is how the presentation would be. Now, what are all the relevant provisions? It's very simple for me because there's only one section which is talking about valuation. Section 15 of the CGST Act. So it's very simple. Only one section which is talking about value of supply. That is section 15 of the CGST Act. Clear? This section you should not forget. Only one section. Nothing hyphen in it. Not like any other topic where you have to remember a lot of sections. Only one section. You have an issue in valuation, go to section 15 of the CGST Act. Now the question will come. But there are IGST Act, there are CGST Act, there are SGST Act. SGST Act is exactly the same. We call verbatim. So section 15 of the SGST Act and CGST Act is verbatim. So you don't have to go to SGST Act for this matter. What about IGST valuation? IGST and UTGST, both acts are saying, you want value? Go to section 15 of the CGST Act. So they are giving a reference to CGST Act. So you don't have to go to IGST Act. Even if you go, CGST Act or IGST Act or UTGST Act will say, go and pick the value from section 15. Okay. So that is a legal framework. So you have to remember only and only one section. That is section 15 of the CGST Act. Now there are various rules. So if I read all these rules, you will not be able to understand. So let's pause for a moment. I will tell you what is this rules are all about. See, the section 15 says, I will give you a brief introduction about how the entire framework of value of supply is being presented in the Act. Okay. Section 15 says, value of supply, the taxable supply, is equal to transaction value. Okay, so the act says value of supply is equal to transaction value. Section says transaction value is nothing but price actually paid or payable, where price is the sole consideration and both the parties, both the supplier and recipient, are not related. So very thumb rule is, section 15 says, if you want to take the transaction value, whatever the value which you are adopting, if that value should be considered as transaction value, then two thumb rules should be followed. One is price should be the sole consideration. Two, both the supplier and recipient shall not be related. So these two are the only conditions which are laid out in section 15. Assume for a moment price is not the sole consideration. We will come to that in detail. Assume for a moment price is not the sole consideration. Section 15 says, I will not be able to help you. You go and pick the value from rule 27. So if the price is not the sole consideration, go to rule 27, pick the value. Second condition says, both the supplier and recipient are related. If they are related, they should not be related. If they are related, section says, I will not be able to help you out. You go and pick the value from rule 28. And rule again 15 says, if the related person, there is one more concept, sole agent distributor, sole agent, sole distributor and all. So again 29 says, if both the parties are related, if they are agent, the relationship is because of agent, then go and pick the value from 29. 30 says, if you are not able to pick the value or arrive the value based on 27 or 28 or 29, come, I will give you the value. Rule 30 says, I will give you the value. Rule 30 is very simple, which says 110% of the cost of production, manufacturing, acquisition or cost of provision of service. Even if that is also not possible, there is a miscellaneous rule, rule 31, which says, okay, you arrive a value which is consistent with section 15 and generally accepted provisions. You just arrive the value, we will consider that. That is rule 31 says. For the purpose of service alone, section says, that rule says, you can skip rule 30 and come to rule 31 directly. This is the by and large provisions. Rule 32 says, okay, now there are certain industries, certain people, specific transaction, I will tell you how to arrive the value. Say for example, forex transactions, air travel agent, second-hand goods, dealer in second-hand goods, and insurance, how to arrive the value. These are all a couple of specified transactions where rule 32 will give the value. Rule 33 says pure agent. All of you sitting here will be facing this pure agent, because those who are incorporating companies, those who are practicing in income tax, or for that matter GST or any law for that matter, you will be paying on behalf of the client the taxes, or you will be paying the ROC fees, etc. So pure agent is very, very important. So it was also there under the old regime. So that is being borrowed, and rule 33 talks about pure agent. Rule 34 says, foreign exchange transactions, assume that your invoice is in foreign currency. What exchange rate to be considered? See, when the law got introduced, they made a blunder in the law. They found it immediately, and a lot of representations are also made. They rectified it on 27th of July 2017. So this is with respect to foreign exchange transactions. Now rule 35 says, there are practices in the industry where we will just fix the number. Say for example 1 lakh. We will say it is inclusive of GST. Now how to take the value out of it? It's a very simple mathematics, how to take the value out. This is the complete framework of value of supply. This is the complete framework of value of supply. That's all. It's a very simple topic. Looks very simple, right? Looks very simple, right? I'll make it very simple for you. Now my job starts. I will complicate to the extreme possible, to the extent possible, in an extremely complicated manner. Then before we finish the session, I will give you the answers to it also. Okay? Now, thus, any doubts on this? When I explained it itself, I told you value of supply is nothing but it's a transaction value, and transaction value is nothing but price actually paid or payable. Even if it is on a credit basis, no problem. That also should be considered. Supplier and recipient are unrelated and price is the sole consideration. Now, here comes the issues. There are two Supreme Court judgments on these two issues. Supplier and recipient are unrelated, there is a Supreme Court judgment. Price is the sole consideration, there is a Supreme Court judgment. These two are under the old regime, but both are relevant under GST. So I picked it because both are Supreme Court judgments. There is no other verdict which is available or which is not possible in our country. So before stepping into the issues, I will give you one example or one case which I dealt recently. This is a company it's a foreign company. They came to India. They set up their manufacturing unit in Sri Perambatoor. And they are into bearing manufacturing. Bearings, you know, right? Bearings will help the things to rotate, even fans, even in the vehicles. The bearings helps the tire to rotate. Wherever there is a rotation, the bearings will be used. Now the company set up a manufacturing unit in Sri Perambatoor. It's an independent company, and they also incorporated one trading company in Chennai. I mean here within the city. Both the companies, what they do, the manufacturing unit will manufacturing the bearings, sell it to the automobile industries or OEM units, they will sell it. They also supply the goods to this trading company. This trading company, what he does, they sell the goods to third parties and they also import from their holding company. They will sell it in the market. So the Chennai based trading company, both are same actually, effectively within the same group, but they formed two entities. Now, this is a typical example for understanding the value of supply. What happened is, in this company, they were manufacturing the bearings at 1,000 rupees per bearing. Okay, one bearing cost was 1,000. They were selling this bearing at 600 rupees. At 600 rupees. Why are they doing it? Because of competition. They wanted to come to India. They want to capture the market, and automobile industry is their target, which is highly competitive, highly price sensitive. So they wanted to cut the price. They got the support from head office, I mean from the holding company. They were selling it typically at 600 rupees. The manufacturing unit will manufacture it for 1,000. They will sell it to unrelated party at 600. For the related party, to the trading company also, they will sell it at 600. The trading unit also will in turn add some small margin and then sell it at that price. Now, from the GST perspective, is there any issue in this particular transaction? That is my precise question. Any issues? I want your answers, please. So far no issues. Very good. Excellent. That is also an answer. I want you to open your mouth. Because don't think that those who are keeping quiet are brilliant. There are only two ways. You ask doubts. Even if it is a dumb doubt, I don't mind. Because I learn a lot of things from the dumb doubts only. So it doesn't matter whether it is a dumb doubt or whether it is valid one. Doesn't matter. We are here only to discuss. None of us are experts. So ask. Tell me whether do you see any issues in this particular transaction as far as valuation is concerned. Yeah.
It's a loss to the department.
Loss to the department. How? Can you just elaborate on this?
Because the fair market value is 1,000.
Yeah.
And the company is trying to promote their bearings.
Yeah.
So they're giving it a discount of 400. So they're selling it for 600.
Okay, but their supplier and recipient are not related, na?
No, but price is not the sole consideration.
Ah, okay,
The motive
good point.
is-
Price is not the sole concern. Then what is the price consideration which is flowing, sir?
It is the sales promotion.
Sales promotion. Okay, good point. Any other views? Sir is saying that there is a 600 rupees value of consideration. There is a sales promotion which is happening. So that is an indirect consideration for you, right? I'll put it this way. It's a market penetration, right? So he's saying that, there is an extra consideration which is flowing. How do we value this extra consideration which is flowing? Market penetrations and all. Is there any way to value it?
Mainly the discount.
Discount? Okay.
No, no, compare it with the other
So
market.
they will mention a MRP as 1,000.
Yeah. No, they will not mention MRP as 1,000. They will sell it at 600 only. Cost of manufacturing, assuming that I have to manufacture that bearing, it's 1,000 rupees. They are selling it at precisely at 600 rupees. Now they are charging discharging liability, GST also on 600. They are saying that is my transaction value, boss. Because that is I am dealing with unrelated party. I am dealing with the 600. What is the problem? Any other point of view?
But he's selling the same 600 to other unit also.
Yeah. Unrelated parties, related party, both they are selling it at 600 rupees. No problem.
Comparative product value.
Comparative, because comparative is little difficult because this company's bearing is little different with a different sophisticated technology they manufacture. It's something like different cars you cannot compare it. Though it is coming under the same sedan category, some products will not be having open market value or comparative values. Now, let me just tell you, we got this issue when we were advising these clients. We told them, sir, you cannot discharge GST on 600 because the general concept in the market is if there is a transaction with unrelated party, what is the price mentioned in the invoice? That will be the transaction value. That is a general presumption. But as a professional, you have to go little beyond that and see, is there any consideration which is flowing into the company directly or indirectly, tangible or intangible, any kind of consideration which is flowing into the company. As sir rightly mentioned, there was a market penetration component which was coming into the picture. Now when you say this kind of explanation to the client will never accept. So we have to rely on one Supreme Court judgment on this. Fiat India Private Limited, they were doing exactly the same thing. What they were doing is, the Fiat market, right? Fiat is not having that kind of market as compared to the competitors. So assuming that the manufacturing cost of a car is 3 lakhs, they were precisely selling it at 1,50,000. Now, this case has come under the excise. The condition was price is not the sole consideration. The same term was there in excise also. So, the department said, no, you are having an indirect consideration by way of market penetration. It went up to Supreme Court. Supreme Court agreed. Supreme Court said, yes, there is a market penetration consideration which is flowing into this. So, whatever the 1,50,000, you cannot consider that as a valuation for the purpose of value. You have to consider as per the provisions of central excise. The price is not the sole consideration. That is what the verdict says. The same provisions are applicable under GST also. When it comes to GST, the same thing is applicable. So, my only humble request is, don't go with when you do audit or when you do certifications, when you do advise the client, don't go merely with the value which is being mentioned. Because we are all professional, we have to go a little beyond that and see, is the price is the sole consideration? 2, both the supplier and recipient are related. Now I'll complicate a little further. Yeah, please, sir. I'll come to that, sir. I'll come to that. This question is, what happens if there is a clearance sale? I will come to that because my discussion is not yet over. Because there are a lot of issues which are being dealt in this particular. This Supreme Court judgment completely shaken the industry. You will be able to correlate this because there are plenty of companies who are doing it. There are plenty of companies, they are doing the job, they are doing the things at a loss. Some taxi aggregators, they were doing it at cheaper cost. Benz was available when they came to Chennai. Benz was available for 6 rupees, 6 rupees per kilometers. When they came to Chennai, 6 rupees was the Benz per kilometer they introduced. Anybody will do that? Will that be a compensation, actual compensation for Benz? No. So they were doing there are plenty of companies like that. They will, when they come to India, or you look at the startups, they initially incur loss. Sometimes you look at based on competition, there are a lot of things which will affect. So you cannot always say that because the transaction value is less than the cost, there is another consideration which is flowing. That is why everybody got shaken. Reason being, tomorrow department can come and say, boss, your sale value is less than the cost, so I will take this difference. Already they are doing a loss business. Now again there is a tax demand, so it will be a double sword. Now after that, what happened is the department has issued a circular on this. That circular deals with what are all the issues, how the things will be considered. Now in that circular it says, no, we will not consider as such. We will look at the verify mere sale of goods below manufacturing cost and profit will not affect the transaction value. That is a clarification which has come from the department. And they said, if there is anything like that, we will go beyond that. They also told the department that the department said to the officers, don't go merely with the value. Merely because it is less than the manufacturing cost, don't go beyond. You go beyond that and then see what is the facts and circumstances of this particular case. Now, even after the circular, still there are a lot of open-ended issues which are not being addressed in this circular. What happens is, as he rightly asked, in case of distress sale, in case of, say for example, vegetable market, assuming that I bought the vegetables at 100 per kg, but I know that it is a perishable goods. If I keep it for tomorrow, I will get nothing. So even if I buy it for 100, I may sell it even at 20 rupees. I will give you a typical example which has come 3 days back. That is why in my last presentation in the institute also I did not discuss this particular issue, because it came last 2 days, 3 days back. I'll tell you the background. We are advising a client who is into software development for one of the biggest FMCG companies. Now this FMCG companies, what they do, they sell the chicken to the distributor. The distributor will sell the chicken to the retailers. The life of the chicken is only 2 days. I learned a lot of things like this. Now you won't understand all this. When we go to the retail shop, we don't understand whether it is only 2 days life or 3 days life. So he's saying it is only having 2 days life. So what happens? The manufacturer will send it to the distributor. Distributor in turn will send it to the retailers. Now the retailer, if he is not able to sell it within 2 days, maybe because of Navaratri or any other festival or anything for that matter, if they are not able to sell it within 2 days, the arrangement is this chicken, whatever is left over, will be taken back by the distributor at 50 rupees. At 50 rupees. Please look at the numbers. Now, this distributor collects all the chicken across the particular region and sell it in a wholesale market on a tender basis. Now they will sell it at 30 rupees. They will sell it at per kg 30 rupees because it's a bulk sale. Now, the distributor is buying it at 50 rupees from the retailers. Distributor is selling it at 30 rupees. Will any businessman do this exercise? So when I asked him, so they were charging GST on this 30 rupees. I asked him, who will do this business? Why should the distributor do this? Then he told me, no Rajiv, it's not like that. The transaction is not yet over. Whatever the loss incurred by the distributor will be compensated by the manufacturer. That 20 rupees also will flow into it. Then I said there is an issue with valuation. Because price is not the sole consideration. You are transacting with him, you are selling, but you are getting the consideration of 20 rupees from the manufacturer. So you have to charge GST on the 20 rupees, not on 30 rupees. So how to do this in the software? Because sale value will be, or the supply, outward supply would be only 430 rupees. So this is one typical example where it's called a subsidy. In the market, it's called a subsidy, which is provided by the manufacturer. Now that subsidy will come, the act is also very clear, it should be included. And here the price is not the sole consideration, so you have to take that whatever the indirect consideration which is flowing from the manufacturer also shall be considered. Now, even after that circular, as I said, the issues are, I would like to make a point here, I'm not concluding on these issues because even I don't have an answer, because Supreme Court has given a judgment, and on that judgment also we have a lot of issues and confusions. The issue will be, when you talk about the profit, will you take the gross profit or net profit? First question. Not yet clear. It is not yet clearly given either in circular or Supreme Court judgment. Second point, maybe the company would have incurred the loss because of the huge overhead. Maybe gross profit level they would have making profit, but at a overhead level there would be huge cost. Will that affect my valuation? Third point, the valuation you should consider the whole set of product, the entire portfolio, or you will look at the individual product. I'll give an example. When I'm buying this laptop, say for example it is costing 1 lakh. They will give me a leather bag also. That leather bag may be costing, say for example, 5,000 rupees. As a part of this, they may be selling it at as 1,000. So there would be different products. Say for example, I have 5 products in my portfolio. Product 1, product 2, product 3, product 4, product 5. Product 1 to 4 are making profit. 5th is not making profit. Will that affect, but overall level I am making profit. Will that affect my valuation? Now, 4th example. Yes, all these are making profit. All 4 are making profit. 1 is making loss. But based on ABC analysis, that is the 80% of the contribution. When I looked into gross profit, again it is a loss. Will that affect my valuation? And next is competitors. You cannot simply go with your costing. You may have to look at the competition also. When you look at the competition, competitor is charging 100 rupees. If I go and charge 120, will they accept it? Sometime to capture the market or sometime to kill the competitors, we may have to charge less than the competitor's price. I will give you an example with that, clear example. One of our clients is into the international courier business. So each packet, they call it as packet, the courier packets. The packets, the price which they are charging is less than DHL price. So the company was started making loss. So I inquired what is the reason behind this loss. Then the director told me, no Rajiv, it's something like this. In the industry, courier industry, there are small companies will come, they will vanish after 2-3 years. This is the general practice in the courier industry. Now, if I'm in the middle category, I'm not up to DHL and not up to the new people also. So I have a brand name in the market. So I told, why don't you fix the price as that of the competitor, DHL? He said, no, I will not be able to do, because there is a difference between the brand. DHL brand is different, my brand is different. So I cannot look at him as a competitor. Though he is my competitor, I may have to fix my price much lesser. Sometimes the competition will come. Sometimes the volume will be high. Sometimes they will buy the space in Lufthansa. At that time there will be empty space. So we heard about marginal costing, right? Sometimes even if you sell it at lesser price, whatever you get is a profit. So sometime in the last minute, they will sell that empty spaces. So these are all the factors. So you cannot, there is no limit for this discussion. Based on the Supreme Court judgment, after that is why I said it is completely shaken all industries. Now there is no limit for this discussion. If we discuss, we can discuss for 5 days on this matter. I am telling you this, we can discuss 5 days. We will not arrive at any conclusion. That is why even Fiat has gone to the Supreme Court and got the judgment. Now, this is the issues, open-ended issues in valuation. Now, I feel I made it very clear for you. Though price is the sole consideration, you cannot take the invoice value because there are there is a Supreme Court judgment which is hanging on our sword, hanging on our head. It's a sword, and you have to take it into consideration, that particular aspect. Now let's look at practically how to find this out. When we started the audit also, the GST audit also, we looked at this perspective also. Now you can talk about the theory, you can talk about the provisions. How do we find it out in the audit? Because all of you are going to do the audit, right? Two very simple exercises. Get their stock average price. Obviously stock would have been maintained the average cost, right? At least a stock of you should maintain. Then only you can do all this exercise. I'm talking about a reasonable company, because I know that there will be companies who will not be maintaining stock at all. Whatever on 31st March, whatever you say, that will be the stock value. I'm not talking about that kind of companies. I'm talking about companies who are maintaining stock, where you have average price of the product, compare the selling price. This I know that you will be doing it for your statutory audit, right? To find out as per AS2 whether it is based on cost or net realizable value, whichever is lower, no? Lower, yeah. For this exercise, you would have been doing this exercise, so you can use the same audit work paper for the GST audit and understand whether any of these products are being sold at less than the market price. This is how you have to practically find it out. Now, I will tell you one more example. I can give you plenty of examples because of pause of time only. One of our client is from Italy. They were importing olive oil. Olive oil is famous for food preparation. If you look at Taj or any 5-star hotel for that matter, they will be using olive oil only. They will not use coconut oil or anything like that. It's a specific, they are very famous for this particular brand. So they imported, and one German guy was heading the team and in India. And what happened was, they were importing, when we looked into it, it was the import price itself is 1,500 including customs duty, everything. But he was selling it at 750 rupees. Literally he was selling it at 750 rupees, and he was selling it at Leela and all these big hotels, and he was selling it at a lesser price. It was continued. We also told him, no, this will not be possible, but he was looking at from the market perspective. One is tax issue. Second is, how long will you do this? Particular point of time, the holding company will also stop supporting the financially. So they also had this kind of issues, because they were literally, because these are practical issues where you cannot look at only from the GST, you have to look at from the market perspective also. So I hope that, though I made it very simple, light way, I hope that all of you would have confused now to a great extent. As far as the price is not the sole consideration, concept is concerned, right? So as a professional, it is our responsibility to go beyond the invoice value. Those who are saying that, okay, both of us are unrelated, invoice value is transaction value, so that will be the value for the GST. Wrong. You have to go beyond that and see what is the reason behind this particular transaction. Now, how do we see this? Now we already practically understood how to find this particular transaction. Go to stock register, find out the value, and then you will be able to understand. Okay. There could be practical scenarios also. So after doing that exercise, you cannot stop there. You have to go a little further. Sir, you are selling it at loss. Why are you doing it? Sometimes he will say perishable. Sometimes they will say, no, I will not be having a market. One of our companies into LED manufacturing. They were selling it at throw price. Because he said, the technology has changed, nobody is there to buy it. So I have to sell it at a cheaper price. Accepted, because there is no other consideration which is flowing into this company. Same way, the same bearing manufacturing company had one more incident, because that's a beautiful example. There was a fire broke out in Madhavara bonded warehouse. Around 2 crores of worth of stock got completely lost. But it's a bearing. It's made of steel, I think, or I'm not sure about the raw material. But that material can be reused. But they are very particular about the quality. They said, no, throw it. They sell it at a cheaper price. Can you bring that back? Can you say that there's another consideration which is flowing? No. So you have to go beyond those and see what are all the transactions and why they are selling it at a loss. This is a precise thing which I would like to make. And I'm not concluding it. You have to go beyond this and find out what is the facts and circumstances on each cases.
Excuse me.
Yeah.
So if suppose they get any insurance coverage for the loss,
Okay.
so will it be considered like
Now what is the aspect? Insurance coverage, if they receive it, how does it affect the value?
no anyhow they are getting some
No.
compensation for the loss
Okay.
which they incurred, right?
No, that will not be considered for the purpose of value. We are talking only about the supplier to recipient. Now, I am being the supplier, I am selling that scrapped stock, I would put it that way, selling it to an unrelated party who is a trader of something. And if I am selling it to you, that is only transaction between you and me. The insurance company transaction is entirely different. So that has to be taken separately. This is separate. So here what I would like to say is, in this particular transaction, in all transactions, you have to go little beyond and see whether there is any consideration which is flowing into the company. Now,
So insurance
Sarah-
compensation will not be subject to GST, right?
no, it will not be. So is there any, see, insurance is entirely, it's a compensation, entirely different. So only the premium will attract, that is only service being agreed. So next is, I would like to take this particular Supreme Court judgment. It is Serographic Limited. Here, the concept was we discussed, price is the sole consideration. Second is both supplier and recipient are not related, right? Now, supplier and recipient are not related. That issue in this particular case has gone up to Supreme Court. The issue was like this. The assessee was transacting with the two distributors. So, the department invoked the provision saying that both are related parties. But company said, no, they are not my related parties. I will not fall into this particular valuation provision. And it went up to Supreme Court. Supreme Court said, if you have to find out whether they are related or not, you look into these three conditions. Look into these three conditions. What are all the conditions? One is mutuality of interest. First. Two, what is the statutory provision which is talking about the related person? And three, price charged from related person should be lower than the normal value. These three conditions should be looked into before you invoke the related party transaction. Now, let's look at what is the statutory provision under GST as far as the related person is concerned. Who are all related person? This we already discussed, this thing. And who are all the related person? Because price we already discussed. Now let's come to the related person. Related person means under section 15 explanation which gives list of around 8 parties who are related. I'll put it this way, I will give you a process which can be used to recollect this. There are 4 list of parties who are related to persons. One is officer or directors of one another's business. Such persons are legally recognized partners. Such persons are employer and employee, or they are members of the family. So I'll put it this way, 1, 2, 3 and 8 are something to do with the persons. Now let's look at the 4th, 5th, 7th and 4, 5, 6, 7. These 4 are related to ownership and control. Here it says any person directly or indirectly owns control more than 25% or more of the outstanding stock. One of them directly or indirectly controls the other, or both of them are directly indirectly controlled by a third person. Together they are directly or indirectly controlling a third person. It's very simple. If I explain, it will be a little complicated. So what I have done is, I took each of these items and gave an example. So here you can see, first example, such officers or directors of one another's business. So I gave an example. See, for example, if I am a partner in a firm and I am transacting with another partner, so we both are legally recognized partners. So if I am transacting with him, then it is a related party transaction. Okay. Second is officers or directors. If I am the officer of my company and there is another director and we both are directors or officers in another business, then if we are transacting, it will be related transaction. Family is also defined It's not like income tax definition where you have to go lineal ascendant descendant. No, they are clearly saying family means section 249 defines family means spouse, children of the person, parents, grandparents, brothers and sisters. So they are all the family members. So if you are dealing with your wife, then the price is not the sole consideration. Assuming that she is cooking some idli for you, then if there is a consideration, assuming that it is for supply, I know that it is not a supply, then you may have to go beyond that, and you have to see they are related, so you have to go to rule 28 to pick the value. So you have to see what is the open market value for the idli. How do you find idli market value, open market value? If you go to Sharana Bhavan, it is different. If you go to small shop, it is different. It is then it says same quality and quantity, same like and quantity. How do your wife's idli can be compared with somebody else's idli? It will be entirely different. Every day it is different. That is different issue. And so you cannot compare that. So it is very difficult. Then it says you go and pick the value from rule 30, cost of manufacturing or production. Can anybody tell me here what is the cost of manufacturing of an idli of your house? Not possible. Then 31 says, okay, any of this not possible, you take whatever the value you wanted to take. But keep your wife in your mind before you take the value. So what I will do is, there are a couple of, I told because of pause of time, I will not be able to cover a couple of basic things. This is one of that related person, that 7, 8 categories. I gave a beautiful examples. So you can go through, I will be sharing this PPT with all of you. So you can go through it, either SARC will circulate, if they are not circulating, I take the responsibility, I will send it across to all of them, all people. Only one small request, give all your email IDs in capital letter. Some people will write a running letter, I understand nothing, all the mails will bounce back. So then they will say that sir not received. So please give your email IDs in capital letter, somebody can initiate it, and everybody only one letter. Only 1 or 2 papers, 3 or papers. Last time everybody started coming and giving one piece papers. And I have to keep everything in my card, so no problem. What I would request is keep 1 paper or 1 or 2 or 3 and then collect all the email IDs, share it to me, I will send the PPT to you. So this is being given, related party transactions, all the examples are available. Family and all, I did not give an example, everybody understands, no? So otherwise, everything is being given. Now, let's understand, there is one more point which I left out in the section 15 explanation. They say, sole agent, sole distributor, sole concessionaire. What is this concept is all about? Agent is sole agent. So assuming that a car manufacturer, I don't want to mention any company's name, car manufacturer who is selling through a distributor, he will be a sole distributor, right? You cannot see one car showroom, you cannot see different thing, right? Sometime you will see, you can see only in Maruti showroom you can see only Maruti, or in Nissan you can see only Nissan. But you cannot see everything in one particular showroom. Then, that being the case, he is not the sole distributor. So, sole concessionaire. Now, you will have a doubt. What is this difference between agent, distributor and concessionaire? That is being given here. I have given what is the complete difference between these 3 concepts. Agent means he will get commission, distributor means he will get profit, and then concessionaire means revenue. Concessionaire is little something like I'll be using their place actually. I mean, you can see BOT projects and all, build, operate, transfer projects and all, where the party, say for example, a company will manufacture, lay down the roads, and they will use the government property. They will use that, occupy that particular place. So you can go through that and understand what is the difference between, because I'll be going through the valuation provision rather than all this basic concepts. Now, this valuation says section 15 is the value, but include something and exclude something. Okay, now we understood what is sole consideration, everything. We dealt all the issues in that particular concept. Now, discussion is on value include something, value exclude something. So, there are 5 items which are included. There is 1 item which is excluded. This is what the act says. So, section 15 plus included 5 item minus 1 excluded item is equal to the valuation. Because section 15 is not yet over. What are all the included items? Taxes under other statutes. Other statute means, here they mean other than GST acts. GST act I mean all the CGST, SGST, IGST, everything. Any amount for which supplier is liable to pay. Third is incidental expenses. Fourth is interest or fees. Fifth is subsidies. Please ensure these 5 terms you should understand. I am going to confuse you on many topics, and I will rely on some Supreme Court judgment or some High Court judgment to conclude on various issues. Taxes. See, for example, all of you will be knowing that when you import, IGST will be paid on customs duty as well. Your assessable value plus customs duty, on that only you will be charging IGST. That is a typical example to say that IGST is applicable including any other taxes. So your value can include. You cannot say that customs duty is also going to the central government, IGST is also going to the central government. So both are same. Now, last session somebody asked me, is there any power for the government to charge tax on tax? Yes, Constitution is not at all prohibiting tax on tax. It is also laid out in intercontinental case law. Supreme Court clearly said tax on tax is possible. So, there is no question of tax on tax. So, you can charge tax on tax, that means GST on customs duty. Another is your municipal taxes, your water tax, municipal taxes, everything. On that also GST is applicable. So value means that also to be included. And next point is any amount for which supplier is liable to pay. This is a big fight which is happening in the industry now. Big fight, especially in the construction industry. Especially in the construction industry. I will tell you what is the issue here. I will first correlate with our own profession. I will tell you those. 2 concepts I will compare it with our own profession. Incidental expenses and any amount for which supplier is liable to pay. Assuming that a chartered accountant is getting into an agreement for doing an audit in Delhi. We are all in Chennai. Assuming that we don't have a branch office in Delhi, we have to travel from here. You would have entered into a letter of engagement. It would have signed clearly saying 1 lakh is the fees and any incidental expenses incurred for the purpose of this assignment will be billed to you at cost. Okay. Now, your audit started. You are going to Delhi. Client is very happy. When you go for an audit and all, they will be treating you like Rajas. So they'll say, no sir, you don't worry. I will book the hotel for you. No worry. I'll pay. This is actually your obligation which is being met by him. 1 point. Second is travel expenses. From here you are going in a flight, which you said I will book it. So there are 3 things. 1 is my audit fee 1 lakh. 2, incidental expenses which you are liable, which is met by the client. 3, your reimbursement of expenses, incidental expenses which you incurred. So when you bill it, you bill 1 lakh plus reimbursement of expenses only for your air travel tickets. Wrong. Even if it is incurred by him, it should also be included. That is what the law says. So even if the client offers, you say no, I will have a GST issues. I will meet all the expenses. Otherwise you word your LOE in such a manner that you are excluding that. Now, if you are including, that will also form part of GST for the purpose of GST. So you have to charge 1 lakh plus whatever the air travel ticket plus whatever the expenditure which he incurred. On that you have to charge GST. Now,
But you are asking the client to put their name in the hotel bill.
sorry, can you come again?
Hotel bill will not be the name of us. It will be the name of the client only.
Correct. That is the problem. See, neither him nor you will be able to take the input tax credit. The question, to answer to your question is, it has nothing to do with the valuation. It has something to go beyond valuation and answer to you that both of them will not be able to take the credit under section 16. That is the issue. Now, valuation purpose, for the purpose of valuation, you have to include. That is what the act says. I will give you a typical example. in the construction industry. Now, look at the construction industry. What is the problem which they are facing? See, I am going to do a project, construction project for one of the government project, a dam which I am going to construct. There was a dam, no, in Hyderabad, I mean the Telangana or Andhra Pradesh, there was a dam which is going to come up. Sorry? Polavaram project. Yeah, Polavaram. So actually, I'll tell you, it's actually 15,000 crores project. Our client is doing the project actually. Now, what happens is AP government is very, very particular about this particular project. Very, very particular, because irrigation, considering all other aspects. Now, the arrangement is entirely different, because I don't want to get into it. Now, what happens is, the transaction is between our client to a contractor, and the contractor will in turn get the money from the government, but government doesn't want to pay to the contractor, because if he defaults, every system will get affected. So government is directly paying to them based on the invoices. Now the question comes, government is also providing, or not government, the main contractor is saying, no, you don't come with your steel, I will give you the steel. We'll give you the steel, you bring your technology, because our client is a ground engineering company. So for the dam, the ground should be very strong, the foundation should be strong, so they are doing it. So they are saying, we will give you the steel. The contract entered was, say for example, 100 crores. Out of that, agreement is also signed, tender is also done, everything is done. After that, the company came and said, to the tune of 20 crores, we have an excess steel, we will give it to you. Now the problem comes, even if he is giving a free of cost material, it's called FOC materials. What is the value? Is it my company has to discharge liability on 100 crores, on 80 crores? This is the point. Understood, right? I have to raise an invoice, I'll be raising only for 80 crores, because he has given me the free of cost material. What is the value here? Is it 100 crores or is it 80 crores? 100. Very good. Any other views? Somebody say 80. No, what is the problem? We'll fight. Any 80s? No 80s. Why should I raise my hand? That fellow will give the answer. Please be participative. What is the thing? 80 or 100? How many of you say 100? 100. How many of you say 80? Good. I like it. I appreciate it. Both the way it should be there. Okay, those who said 100, I would like to support 80. Those who said 100, why are you saying 100? I want an answer. Yeah.
It's a consideration.
It's a consideration. Okay. Don't worry. 80 is also correct. 100 is also correct. Yeah. Already there are two schools of thought. I mean, from the expert level, there are two schools of thought. So don't worry. Both are correct. Now I will tell you where is the difference which will be coming into the picture because of the case law. Now, the thumb rule is, it would be 100 provided the agreement is for 100 crores. Assuming that the agreement is 80 crores and FOC material is for 20 crores which is coming, then no, then it will be only 80 crores. So it's purely based on your agreement. I know that those who are some of the experts will not agree with me, because they are still in the opinion that no, there is a consideration which is flown, so the value should be 100 crores. If my opinion, the act is clearly worded, which says if any amount that the supplier is liable to pay, if I am entering into a contract for 80, am I liable for that still? That being the case, I have to take up the entire 15,000 crores into my valuation, because foundation level you cannot do anything now. So these are all the practical issues. Now I'll bring.
Yesterday someone was doing some circular in the
Sorry, sir. Can I complete this 1 minute? Yeah. Now I would like to mention the Supreme Court judgment for this particular transaction. Those who are opposing or those who are talking anything about other than inclusion or exclusion, whoever it may be. Cooch Behar Contract Association versus State of West Bengal. It was a 1996 case law from the Supreme Court where they are saying if you are transferring the ownership, in our case, if they are transferring the ownership of the steels to my company, 100 crores is the value. If they are not transferring the ownership to me, then still it will be 80 crores only. I would like to add one more point to it, considering the GST provision. If the agreement is for 100 crores, and they are transferring the ownership to me, then it will be 100 crores. If the ownership, if the value is 180, and if they are transferring to me, still it is 100. If the value is 80, if they are not transferring to me that steel ownership, then it is only 80. So please keep two things in mind: ownership transfer to agreement value. These two are very, very important. There are other issues also. Job work. Typically job work, what will you do? You will send the material to them. They will do only the process. So government said no, we will not consider that. We will consider only the service component. Because contract is involved only for the supply of service. That is why you can figure it out from this explanation also that job work clearly says contract involved for supply of service. So if I am entering into a contract with 80 crores only, 100 crores only. So that is what I would like to precisely mention. Incidental expenses, we already explained. Incidental expenses, any expenses incurred by a CA, if it is reimbursed, it will be charged, the GST will be charged as it will be composite supply. And these incidental expenses, you have to clearly see, it is incurred at the time of or before the delivery of goods or services. And if charges are recovered by the supplier after the balance sheet sign off or something like that, that will not be included for the value of supply. Now let's look at the interest. Yeah.
In case of incidental expenses, so if the CA is receiving those services and he's already paying GST on that,
Yeah.
then they charge GST on top of the total value to the customer.
Now can you come again? That say for example.
If I book the hotel,
Yeah.
hotel tariff rate is 5,000,
Yeah.
I pay GST on that,
Yeah.
18%,
Yeah.
whatever that is.
Yeah.
And then I make the bill to the client.
Correct.
So that is 5,000 plus 18%.
Yeah,
On top
correct.
of that,
Correct,
GST.
absolutely right, absolutely right. See, as far as the reimbursement is concerned, you are not reimbursing as CGST, SGST. You are reimbursing as I incurred 5,800 as my cost. Please pay this. Because you are not charging GST on it. I will explain little more. I said taxes are not applicable on taxes. On CGST and SGST it is not applicable. That is excluded for the purpose of value. But when you look at from your client's perspective or from your perspective, you are charging them 5,800 including GST. So it's actually value itself is 5,400. So GST will be applicable on your invoice value of 1 lakh plus whatever the total reimbursement you are claiming. It is a double taxation, but nothing can be done. Next is interest or late fees. Now what happens is, there is an industry practice that if I supply to you, you have to pay me within 30 days, right? You would have seen it in there, but nobody will follow that, but that's a different issue. But you would have seen that 30 days it has to be paid, otherwise interest of 18% will be charged. Correct? Now the concept is, if that is being charged, will that form part of my value? Act says, yes, it will form part of your value. I am going little beyond my topic, from value of supply to time of supply, then only you will be able to understand it completely, because you have to have a complete overview of, because it's all connected. Now let's explain one small point. Assuming GST is based on accrual, right? Now the moment I mentioned that this invoice, if it is not paid within 30 days, you have to pay 18% per annum. Don't you think that there will be GST liability on that accruals? Right? I will be, whether you receive it or not, doesn't matter. We will also provide service. Sometime it will not be received, right? But still we are paying GST. So, what happens? understood, the government understood this. There is only one area where GST said, no, doesn't matter, we will not be charging you based on accrual, we will be charging you based on receipt. Time of supply, if you go to time of supply section 12 and 13, it says, for the purpose of this collection of interest, it is based on receipt. Adoption of the money. If you want to pay, you can pay, no problem. In advance also you can pay, but it says based on collection only, the GST needs to be discharged, GST liability. Clear? So that I can correlate with all these things. See, this is one example where for value you have to go to other topics. There is a case where we had to go outside the scope. I'll tell you once I finished off, I'll just explain you that one small thing, because it has to go, you have to travel to FEMA also. I'll tell you, because it's a very, very important topic.
Sir, for the interest,
Yeah.
for the interest, awarded has to raise a bill on the contractor.
Sir, you're talking about interest?
Interest.
Interest, see, assuming that I'm the supplier, I'm supplying for 1 lakh and he has not paid within 30 days. Now I'm charging him interest for within whatever 60 days after that he has paid. I'm charging 60 days, whatever the interest at 18% for 60 days I'm charging. That is also included for the purpose of value. That is the only point. Now, one case came to me. This is a foreign company. Their head office is located outside India, obviously. That company wanted a machine to be exported from India. It's a sophisticated technology which they are using. So they want that nobody will buy it. It will not be having any open market value. So they wanted to buy it back. Now the question comes, what should be the value? I will not get into the valuation, but the value which we arrived based on GST is 1.5 crores. The holding company told, I will not pay you 1.5 crores, your Indian laws and all, I don't mind, I'll pay you only 1 crore. Now the problem comes, what is the value? Obviously it's an export of service, it's a zero rated, but the company decided to go with the payment of taxes, okay, IGST, so that the cash flow will not be having any issues. Now the point is, on what value he has to discharge the GST? On 1 crore or 1.5 crores? The invoice value should be 1 crore or 1.5 crores. GST value says it should be 1.5. Holding company says, I will not pay you your 1.5, I'll pay you only 1 crore. That's all. You do whatever you wanted in India. It came to us. So what will you do in this particular scenario? You will invoice it at 1.5 crores? I want your answers. Yes? Okay. How many of you will bill it for 1.5 crores? As per GST Act. Otherwise you will be non-compliant, na? How many of you will charge 1 crore? Why 1 crore, sir? But they are related, sir. They are related, so you cannot consider transaction value as the value. You have to go a little beyond. Go to 28. We picked the value from rule 28. It was 1.5 crores. Now will you mention 1.5 or 1 crore? How many of you say 1.5?
We will bill 1 crore with the tax on 1.5.
Bit difficult, because when you travel to rule 46, it says something. It says for the for the invoice, it clearly says value of supply, value of taxable supply after deductions, after discount and rebate. That is what the exact word they've used. If any, that is what it says. It would be little difficult. Now the problem is, if you charge 1.5 crores, you are not going to realize 1.5 crores. You are going to realize only 1 crore. Correct? You will get a notice from FEMA, RBI, saying that, boss, where is the balance amount? True? Correct? For non-realization of export of goods, you will get a notice from FEMA. It is a non-compliance under FEMA. First step. Okay. Let's take 1 crore. It is a non-compliance under GST. Now you are in between devil and sea. Now you decide where to go. So we advised the client, okay, anyway you don't go for payment of taxes. Go for a zero rated with LUT anyway you are having. Anyway, it is a non-compliance. We'll see it at later point of time, because don't go to FEMA. He is much danger guy. At least this guy is a newborn baby. Adichalu konjam miduvada adipa. Angana same adipa. So sometimes you have to go a little, because GST is not a law which is restricted to GST. If you are advising client based on GST alone, you will be making a mistake. You have to understand the other perspective also, because overall perspective, macro level view should be seen before advising the client. Assuming that I know only GST, little bit of, you don't have to be expert, but no, then I will say, sir, open market bill 1.5 bill it. After 9 months or 10 months, they will get a notice from RBI saying that, boss, where is the balance amount? At that time, no, you only advised 1.5. I only put it 1.5. We will take a call. No. Ask him to collect the balance amount. He will not get the money also. So you have to travel a little beyond GST and look at other laws also. Now, subsidies. Subsidies is a really important concept. I already gave an example, that chicken case. That is something which is consideration was flowing from somebody else. I'll give you an example. You know urea, right? Urea chemical, which has a national importance. So what happens when they sell urea, assuming that 1 kg of urea is 100 rupees, because the act says any subsidy linked to price, any subsidy, I will repeat, any subsidy linked to price which is given by the central government or state government, I will repeat, central government or state government, are excluded from value. I will repeat, price linked, central government and state government given are excluded from value, otherwise all subsidies are included. I will give you an example. Urea is a national importance, so state government will give subsidy to a urea. Say for example 1 kg is 100 rupees. Government is saying no, you charge it at 50 rupees. Now GST will be applicable only on 50, not on 100, though the consideration is flowing from central government, because it clearly says subsidy from government or state government you exclude. I'll give you the same example where a private limited company out of CSR fund is giving 50 rupees. Now GST is applicable on 100 or 50? 100, clear? So it is not a subsidy. So thumb rule is subsidy should come from central government or state government linked to price. Why I am stressing on linked to price? I will give you one more example. You know Tamil Nadu government is giving capital subsidy for the products, right? So assuming that, so even recently also one of my clients has applied for subsidy, got it. They're giving at least 25% it seems. So assuming this company has bought Mitsubishi machine, lathe machine from Delhi, they got it. Now the client came to me and asked, sir, any government subsidy, GST, it says it should not be included. That being the case, it's a worth of 1 crore worth machine. GST should be charged. Government is giving me 25% subsidy. So GST is chargeable on 75 or 1 crore. My client is buying, but he would like to tell to Mitsubishi, sir, boss, don't charge me GST, I don't have that much of fund. Now, because my cash flow will affect. Now I told him, boss, subsidy is linked to price. This is not a subsidy linked to price, it is a capital subsidy. No impact on GST. GST has to be charged on the entire transaction value. That is 1 crore. Clear? I'll give you as much as possible. Because of pause of time only, I am restricting my examples. These are all typical practical example or literally which I have come across, to be very honest. So I can give it to you so that you will be able to correlate. Okay? Because we are going in a slow pace, I know, but without giving these examples, if I go, you will understand nothing. At least you will remember that there is a subsidy, capital subsidy, all these things. Are you able to appreciate it? Yes. Are you able to understand it? Yes. Okay? Okay, fine. Now, anyway, I will be sharing my PPT also. Now, what does value excludes? Only one item, discount. Only one item, discount. Discount says, if any discount given at the time or before the delivery of goods or the time of supply, it says time of supply, then that shall be included. That means before the time of supply, I am giving you discount of 10%, that should be included. That is 100 rupees is the product, I am giving you 10% discount, then and there, the value, taxable value will be 90 rupees. This is one example. Okay, this is before the delivery. Now, in case of after the supply has been affected, only one case it is allowed. Okay, you are giving a discount post supply, but that is already entered, the agreement is already entered at the time of supply. For example, I am entering into an agreement with a company for supply of service. I am telling that 1 lakh is the price, but if you are making a payment within my payment term is, say for example 90 days. I am telling that if you are making a payment within 30 days, I will give you a discount. This term is already entered before the time of supply. Already in my PO itself it is there. That will be considered for the purpose of value, that has to be reduced. Now, how to reduce that value? By credit note. Now, when I talk about reduce the value and all, it is by way of credit note, you can reduce the value. But if it is not satisfying, that credit note should not have GST component. It will be merely a financial credit note. Okay. So, credit note, financial credit note. If it is included, it will be normal credit note with the GST credit note. If it is not included, that is, it is not at all considered for the purpose of GST, then it will be a financial credit note. Now, agreement is again difficult. As per the Indian Contract Act, oral agreement is also agreement, right? It's very difficult. I would say you put it into proper format, proper agreement, and document it properly so that you are safe. Don't say go to the thing and then say oral agreement is also there. I already entered into an oral agreement. Nothing will work. We have to go with the documentation only. Now, there will be, in discount itself, there are plenty of discounts. Say for example, I am selling the goods. Okay, I am selling the goods to him and I found that he is become insolvent. I am telling him the value is 1 lakh, but still, you paid. Then that is a discount I am giving. 50,000 I am giving a discount. That discount is not at all, it cannot be used, you cannot reduce the value. You have to charge on 1 crore, and if you are getting 50 lakhs from him, because that term is not entered, that agreement is not entered at the time of supply. Clear? So this will be merely a financial credit note and you will close it. Anyway, it's like a bad debt where you are going to collect it. Now there are various discounts actually, bill discount, off bill discount, cash discount, and you can see quantity discount, special discount, discount in kind, free stock, buy one get one free. You can see, you go to any retail shop, they will say buy one get one free, right? All these transactions I explained how it has to be treated in this particular scenario for the purpose of valuation. I'll be sharing this, you just go through it, okay? Now let's come to the rules. Rules, so we know broadly we know what are all the rules, right? 27, price is not the sole consideration. 28, both are related person. 29, agent. 30, if any of these are not satisfying, we'll go to 30, cost of 110% of the cost of production, acquisition and manufacturing. 31, then like that it goes. So I'll quickly take you through this. Before going to the rules, there are two terms which you have to understand. Full value, what is open market value? Full value in money excluding GST taxes and cess, where supplier and recipient are not related, price is the sole consideration and supply at the same time and being valued is same. When the supply is being valued is made. Supply of goods, this is also very important, like, kind and quality means, because I will when it comes to the provision only you will come to know. Any supply of goods or services are both made under similar circumstances in respect of the characteristics, quality, quantity, functional component, material and reputation of the goods and services are both same as or closely or substantially resemble. Very difficult to find these kind of transactions. Now, rule 27 says, if you don't get the value, price is not the sole consideration, come to me, I will give you the value. It says open market value. Very important, be with me. I'm going to tell you a couple of very beautiful cases. Open market value. Open market value, sorry. Open market value has already been defined here. It says full value in money and all these things. Price is the sole consideration and obtain such. So that means, say for example, I am going to buy an iPhone. iPhone's open market value I know, right? I know the open market value. It is 1 lakh. Even if you are going, I am going, it is 1 lakh only, right? So that is open market value of the goods. Now, if I am going to buy iPhone, obviously I will give my old phone to them, right? I have a Samsung phone, I will give it to them, they will be giving me 20,000. Now GST has to be charged on 80 or 100?
80.
Why 80? Why 80? Because price is not the sole consideration. Huh? That being the case, you have to go and then pick the open market value. What is open market value? It is 1 lakh. So it is actually to be charged on 1 lakh, open market value. Money plus value in kind. Assume that the open market value is not available. You have to take money plus value in kind. We break at 15 minutes? After 15 minutes? Yeah. Money plus value in kind. So for example, you got 40,000 and you got another product which you valued it and you found that it is 60,000, then value will be 1 lakh. Value of like, kind and quality. Very difficult. Same kind of iPhone in the market. Money plus rule 30 or 31. If you are not able to identify this, this is in this order you have to go. And when it comes to, there are some issues also, instances, because of course of time I am just moving. And rule 28, when it comes to rule 28 where both the parties are related, then it says intended for further supply. Here you be very careful, be with me. This is why I said, when I started my presentation also, I said there is an industry problem. See, this distinct, the rule says between distinct or related person. But in the act we didn't see distinct. We saw only there are, if both are controlled by third party, they could have, because they defined a distinct person and all different, separately under section 25. They could have clearly say transaction with a distinct person is also there. That is also warrant valuation, rule, that will be, you may have to refer 28. But act didn't say. But tomorrow also they can come and say the branch is controlled by the other branch. Based on that control definition, they will fit to this branch. So here in the rules they are very clear. Though they left out that word in the act by mistake, now they are including this. Now when they include it, they are saying, again, if it is intended for further supply, be very, very careful here. Be very, very careful. This is what the industry is saying, stock transfer. Intended for further supply, then open market value or value of like, kind and quality, rule 30. In case, I will give you an option, 90% of the price charged for the supply of goods of like, kind and quality to unrelated customer. That is, if I am selling the goods from Chennai, that same bearing manufacturing company's case, I will tell you, from here, Chennai, they will be transferring the stock to Gurgaon. When they are transferring to Gurgaon, say for example that is price is 600 rupees. For computer purpose, I will keep it as 1000. Assuming that it is 1000, they have two options. Either they can sell it at, transfer the stock to Gurgaon at 1000, or they can take 90% of the price charged by Gurgaon office to the customer. Assuming that the Gurgaon office is charging 1000, they can transfer the stock at 90%. That means at 900 rupees they can charge. It is an option which is given, it is not mandatory. Now, let's go to the text of rule 28. This is the rule 28 text. Value of goods, value of supply of goods and services or both between distinct person under section 24 and 4 and 5, both are branches only. One is registered, one is unregistered branch, or where the supplier and recipient are related, other than where the supply is made through an agent. Now, can you show me stock transfer word in this provision? No, right? Now, let's look at the second issue in this. It says, the provision says that 90% you can take it only when what cases? Applicable only for goods. This first provision says this 90% can be taken when intended for further supply as such. Be very, very careful, as such. Assuming that I am a trading company, I am sending it to Gurgaon. Gurgaon is selling as such. Then only that 90% provision is available. Please be very, very careful. No stock transfer. No stock transfer. Assuming that from Chennai I am sending into my Gurgaon office for manufacturing. You cannot exercise this proviso. I've seen this company doing it. When I asked him, sir, stock transfer 90%. Boss, that is only for when you do a stock transfer or supply, further supply as such, without any process or modification. But if you're supplying for manufacturing, this option is not at all available. So please be very, very careful here. Look at this. That being the case, this exercise cannot be used 90%. So what would have happened? What would be the typical exposure to me? As a company, I would have charged 900 instead of 1000, right? Now that 100 rupees demand can come, the department can come and raise a demand. You understood what is the issue? Understood? Don't use the word stock transfer. That 90% is available only when there is a further supply as such. That is the only point which I would like to make. Now, there is a second proviso, which is a very, very beautiful proviso. First, nobody understood this. Second, everybody understood it. Third, everybody understood that. No, further there are some other issues. Little complicated, I'll tell you. Act says, the provision says, no problem. If you are doing a transfer from one place to another place, there is a supply. If the recipient is able to take full input tax credit, I'll repeat, if the recipient is able to take full input tax credit, then whatever the value you mention in the invoice will be considered as open market value. Beautiful definition. So what happens? If the other person, say my branch is able to take full input tax credit, open market value is given. So even if I put 1 rupee, that is open market value. Stock transfer. This was the initial interpretation, right? Assuming that the party is able to take full input tax credit, assuming that your branch, your recipient is doing some exempted supply or non-taxable supply, then that party will not be able to take in full input tax credit because they have to reverse the input tax credit under rule 42 and 43. But assume for a moment they are eligible to take 100% or full input tax credit, then whatever the value you mention in the invoice will be deemed to be the open market value. Now the question comes, sir, can I fix 1 rupee? Yes, you can fix 1 rupee. Now the issue is, we were in section 15, right? We fixed the 1 rupee based on rule 28, right? Now when we go back, I'll just theoretically say, little practically I will explain. This is not how the law works, but like a practical way I will explain. So don't think that this is how the law works. But I was in section 15. I came to rule 28 because they are related. I picked the value based on the second proviso. I picked the value as 1 rupee. I went back. Act says you have to satisfy one more condition. Price is not the sole consideration. That point is hitting me. I'm coming back to rule 27. You have to come back to rule 27 when the price is not the sole consideration. There, these two provisos are not there. For the open market value, for the purpose of rule 27, the second proviso is not there. Whatever invoice value shall be considered as deemed open market value. So their open market value will hit. So my humble request is just ensure that you are going through all these transactions when you do a stock transfer. It's not a mere stock transfer. This is a further supply happens. So the valuations are little tricky and it is a daily affair. It's not something which is happening once in a blue moon. So it is a daily affair. So go through rule 27 and 28. If you have any doubt, you can call me, but now time is running out, so I'll move on to the next one. So in case of rule 29, if it is a transaction between a principal and agent, you take the open market value and or you have an option 90% of the price charge, same provisions. Look at this. If Maruti dealer, if used as a demo car, see for example from the principal, it will come to the agent, right? This car industry, what happens is, in the car dealers, they sell the goods as such, they also use the goods for demo purpose. If it is for demo purpose, this 90% cannot be used. If it is, then you have to take the open market value only. If they are using for further supply as such, then you can take it. Now, rule 30 says, okay, you are not able to find the value based on rule 27 or 28 or 29. Come to me, I will give you the value. What is the value? It's 110% of production, manufacture, acquisition, provision of service. 3 keywords: production, manufacturing. So, you cannot say that I don't know what is my production cost, right? If you don't know, if you say that you don't know, government has a power to appoint a cost accountant and chartered accountant to find out what is the cost of production or cost of manufacturing based on the cost accounting standards. So they will come and do it. And in case, in rare situation, you are not having this data, go to rule 31, that is a residual method. Okay. Next is value of supply in case of, this is rule 31, it was an afterthought, so they came and introduced it. It's a lottery related point, so I'll quickly tell what is the crux of this particular provision. If the lottery is run by this government, state government, the lottery is run by state government, say for example Kerala government is running a lottery called Karunya lottery, I think. If that being the case, you have to arrive the value as 100 divided by 112 of the face value of the ticket, or if it is an authorized by state government, it is not owned by the state government, it is authorized by state government to run the lottery, then you take 100 divided by 128. I'll just move on. I think this will be a rare theoretical topic, so I'll just move on to the next one. Horse riding and all, there is a value which is being given, so I'll move on to the important point. Value of supply, this is rule 32. In case of certain supplies, purchase or sale in foreign currency. So if you are buying and dealing in foreign currency, they are saying you should, they gave 2 options actually. So you can go through it. I'm just skipping this because of I have to cover one important point in this itself. So I'll just flip through it. Air travel agent, I'll just tell you the crux. If it is a domestic booking, 5% of the base fare. International booking, then 10% of the basic fare. Okay. Now life insurance, life insurance, any insurance, if you are charging, see for example you look at the life insurance premium, they will take first premium, they will take 25% of the premium as value. Subsequently they will take 12.5. You look at your LIC premium receipt, it will be like this. Life insurance premium 3221. This is because I just wanted to validate, so I saw this life insurance premium receipt. 3221 was the premium. In the bottom they clearly mentioned GST included is 72.4 rupees. That is nothing but 12.5% of the premium paid into 18%. This is how they value it. Medical insurance, no. On the entire premium it is taxable. I am talking only about the life insurance. So, other than life insurance, everything will be taxed at the normal rate. Now, second-hand goods dealer, you can go through it. I'll just move on to the next one. Can I have 5 more minutes? Yeah, I'll just finish it off, no problem. So next is voucher and notification and all. Based on notification, government can do that. Next is pure agent, because this is something where I would like to spend 2 minutes. Pure agent means, see for example, a chartered accountant is incorporating a company. That company, what happens? You will be also paying, say for example, you are charging 1 lakh. You will also be paying the ROC filing fee, right? Company incorporation, that ROC charges, you will get it reimbursed. So and then the valuation we said, incidental expenses should be included. But rule 33 says, if you are acting as a pure agent, what is pure agent? I have no role in it. Invoice also in the company's name. It's nothing to do with me. I am not adding any profit on it. I'm just giving to him. Assuming that you are adding profit, then you are not a pure agent. So assuming that company incorporation charges are the government receipt saying that, for filing form 1, 2, 3 and all, let's say for example it is 10,000. Then you have to charge GST only on your 1 lakh. Though it is an incidental expenses, it is actually because you are a pure agent, acting as a pure agent, you have to charge only on 1 lakh. So pure agent means pure agent, which is also defined, which is you don't have the ownership of that product or service or goods or services, and you are not having any any markup on that particular number. You will not be having that 10,000 value, you will not be having any markup. If you are having markup, then it will be included. Then you have to clearly disclose in your return and in your invoice that this is a pure age, you are acting as a pure agent, and then you are reimbursing this 10,000. Now, rate of exchange currency. This is the blender which they made. What happens is, initially when the act got introduced, they said you have to take the rate as per the, see, you know the customs and all, what they do, they will, when you import the goods, when you import the goods, they will take the rate which is prescribed notified in the previous month. Say for example $62. They will give a notification on 25th saying that dollar will be 62. Next whole transaction will be based on 62. GST Act said no RBI notified rate on that particular date. First issue, RBI notified rate will not be available for all currencies. 2, RBI rate notified rate and customs rate will be different. Now which rate will you take? Custom will take their own rate. They will charge IGST. Now you have to, now when you do the audit also you will find this issue. They would have followed RBI rate or customs rate only, but it is not in line with the CGST Act. So you have to take a call on this particular issue. Now this is a pure mathematics. Value, what are all included in a value? It's a pure mathematics. Tax amount is equal to value of inclusive of taxes. Say for example 118 rupees is the lump sum amount, you got it. How to find it out? 118 into 18 divided by 118, you will get the tax amount. If you want to get the value, 118 into 100 divided by 118. It's a pure mathematics. That's all about value inclusions. So how to find out the value. So this is all about the value of supply. Any doubts? Quickly, half a minute. Any doubts on value of supply? It was like a bomb blast, right? Started like a simple thing, only one section, gave a lot of hope to everyone saying that it's a very simple thing, but finally concluded with a disaster, right? But understood this valuation provisions fairly, correct?
Services don't have to be valued at customs.
Yeah.
Fine.
No. Yeah, that's a good point. So as per rule 34, it says, initially they said it is based on RBI rate. For the services alone, they said you can take generally accepted accounting principle, buddy. Whatever the rate you would like to take, you can take it. So no problem in that. So for accounting standard, when you book the invoices, that time whatever rate you are taking, whether you are taking one.com rate, RBI rate, or you take whatever the books rate you are taking for the books, that can be considered.
Now it is RBI rate, not customs rate.
No. First it was RBI rate up to 26th varaikkum. Then it is subsequently amended. They said no, it is based on the customs rate. Okay. Now, yeah.
In case of joint development agreements, flats,
Okay.
then we give some flats to the landowner.
Yeah. Highly disputable one, sir. There was a notification called 4/2018 notification which clearly defines what is the value to be adopted. Not value, I would say it is came under 148. 148 is a procedural clarification. Can I take this thing off the thing?
Sure.
Because I'll tell you the thing, it's the 4/2018 notification. It is applicable, and how the joint development agreement, some people are saying it is constitutionally not valid, that the notification itself is not constitutionally valid and all. I'll explain to you that post, during the tea break, or if I get time in the next session. Okay. Thank you. We will break for tea and then we'll come back. Exactly after 10 minutes. Okay. We'll start the presentation. Yeah? Everybody has come back? Can you just close the door if you don't mind? Yeah. So we had a bomb blast, right? As I said before the tea break, right? Now we'll have one more blaster. Because under GST, when it came, they said it's a simple tax. Don't worry. Even in WhatsApp also I've seen some photos. GST when they introduced one small bridge, and the WhatsApp photo says it made a lot of sense to me. After 1 year, there are multiple bridges. Nobody knows where to go, how to go, where to go. So literally this is the case of GST. as on date. Now why? Especially if you look at the refund section, section 54, there are plenty of amendments. There are plenty of amendments. Every rule amendment, CGST rule amendment, there will be something related to refund. After some point of time, people like us started expecting the amendment. Okay, the moment you say that there is a CGST rule amendment, okay, there will be something related to refund. So we have come to such a stage, the notification, circulars, press release with respect to refund has gone extraordinarily large in volume. So if somebody says, I understand refund, then we have to ensure that he has gone through all the notification and circulars. Now second point is, we being professionals blamed for everything. What happens? You will tell the client, this is the act says, this is the provision says. Government will, after 1 month, will issue a notification with retrospective effect. Now what happens? Client will approach the department will say, no, this is the provision. So, we being a professional, we cannot simply forward the notifications, right? We will go through it because there are notifications on, especially on the due date dates, there are plenty of notifications which are being forged. Even Prime Minister's signature is also being forged, it seems. Everything will be forged now. So we will not be relying on it. We will wait for the department to notify in their website. We will download it. We will see what is the impact of it, both the pros and cons, and what is the impact, because that notification would have given reference to another notification, that notification would have given reference to another notification, that notification would have given another notification reference. So finally, when you conclude all these things, you need at least 1 or 2 days to go through it and then finalize it and communicate to the client. Before that, WhatsApp client already got it. Client will come, sir, notification vandichu sir. Oh, apriya, okay, let me just see it. We are already going through it. We will let you know the provisions. So this is the status as on date under GST. Refund being this, adding more problems to us because of the notification. Refund is very, very important for the companies because of the working capital issue. Now, refund, how am I going to structure my presentation today? Refund, section 54, section 55, section 56, section 57, 58. All are there. But literally if you look at it, what is relevant for you is only 54. 55 talks about UN embassies and other things. The government has power to notify. 56 says, no, interest related provision they are talking about. 57 and 58, they are saying, fund will be credited to funder. What funder? Refund will be credited to funder. Consumer welfare funder. Who will be the administration? Who will take? None of our business. We will stick to rule section 54. Now, section 54 to 58 talks about the section, the refund provisions. Same as CGST, SGST is verbatim, and 20 and 21 of IGST and UTGST as the case may be, saying, if you want refund, go to CGST Act, refer there. Don't come to me. So, now there are rules which are relevant, very, very relevant. Notification numbers have been listed out and gave it to you. Circulars have been listed and give it to you. So this will be like one place where you can go through everything. I understand that there are very few email IDs have been received. I think somebody has not taken the initiative. I think I got only from you. You got it? Okay, fine. So please share that. So otherwise you will not be able to. I will not be able to share this presentation either through SARC or through me. Second is, in this section 54, refund itself is a 3 hours, 4 hours session. Now out of this refund, the topic given to me is refund, give due preference to inverted duty structure. Section 54 talks about inverted duty structure. One of the refund reason they are giving, they told that you give little more preference to it. So I will be sticking with that instruction. Now, let's answer together. What are all the instances where you can go for refund? Doesn't matter. Whoever says first will get the answer. At least whatever you know, you tell first.
Zero rated, sir.
Export, zero rated. Fine, very good.
Exports must only get
Export, zero rated. Then
Persons who are helping the exporters. They also have
helping the
that.
exporters. Okay.
Supplying to the exporters.
Okay, deemed exports. Okay, fine.
Concessional rate.
Sorry, sir.
Concessional rate. 0.5%.
Yeah, that is what he's saying. Deemed export and other things. Yeah. Any other thing?
Difference in rates.
Difference in rate. Okay, that's basically inverted duty structure. Okay.
And excess credit in cash ledger.
Excess credit in cash ledger. Okay. Then
Wrong payments.
wrong payments. Very good. All good points. Then
Then external regimes balance.
okay. Okay, that will come as an ITC. Yeah, that you cannot claim it as a refund. Yeah. Next.
By mistake, if I pay IGST instead of
Very good.
GST.
Section 77 of the CGST Act and Section 19 of the IGST Act says if you have wrongly paid CGST instead of IGST or IGST instead of CGST SGST, you can come for the refund. Section 77 of CGST Act and 19 of the IGST Act clearly says that. Very good. Next.
Closure of business.
Closure of business. I will give you an example for that. Not possible. Next. Next. Any idea? There is a typical unique, almost everything you have answered it. There are a couple of special cases where foreign tourists comes to India and then when they are going back, Section 15 of the IGST Act says that go give refund to them because they are foreign national tourists. They are coming to India, they are going back, give the refund. Now, I want to make it very clear. I will open 3 buckets. All your concepts, whatever you said, I will put it into 3 buckets. Then we will start answering and taking the issues. Refund of outward GST paid or GST paid on outward supply, 1 bucket. GST paid on outward supply, 1 bucket. Where you can see all IGST paid on zero rated supply, that is on export or SEC supply, wrongly paid, all these things we can put it into 1 bucket. Second bucket is refund of application for input tax credit. I'll repeat, input tax credit, even inverted duty structure also will come into IGST the paid only. Second one is, it will come into this only, ITC. Second bucket is input tax credit. There is only and only 2 places, I'll repeat, only and only 2 cases you can apply for input tax credit refund. One is zero rated supply where you had LUT, you're going for a refund, both supply to SEC or export. 2, inverted duty structure. That means my outward supplies rate is lower than my inward supply rate. I am repeating it again and again and again. Only in the ITC bucket we have only 2 cases. Only 2 cases. Third bucket is cash ledger refund. Whatever you wrongly paid, IGST paid instead of SGST and all these things we can put it into cash ledger. First question. Sir asked, when the company close its business, can they avail or can they apply for a refund? Now you answer me. Now I want you to answer. Yes or no?
If it is in cash ledger, you can.
Okay, cash ledger, it's ITC. You cannot. I am repeating, input tax credit claim can be claimed, input tax credit refund can be claimed only in 2 circumstances. Act is not giving you any kind of privilege other than this. What is that? One is export, that means zero rated supply, export and SEC supply. 2, inverted duty structure. Now you answer it. Can the refund ITC lying in my input tax credit ledger at the time of closure of the business, can I claim refund? Yes or no? Yes?
Suppose if it falls within those 2 categories.
Obviously. That I do agree. If both are falling into that category, obviously you can claim. Otherwise, it's only mere transaction. Then can you claim? No. I will give you an example which has happened to our client. This client is having a complete administration, everything, head office is located in Chennai. They have a branch in Pondicherry. They have branch across India. And within, for that matter, even within the state, multiple places. But one single registration. this company, because of after the introduction of GST, what they did is, because of the business practice, as a strategic decision, they closed down the Pondicherry branch. They closed down the Pondicherry branch. The amount of credit which was lying in their account was 18 lakhs. For computation purpose, I am rounding it off. 18 lakh was the input tax credit which was lying in the ITC credit ledger. Now, no stock available in that branch, not even a single person, no rent, nothing, completely shut down. After 2 months or 3 months, they realized that there is an amount which is lying. They cannot apply for a refund because section is not giving provision. Now what to do? They cleverly did one thing, because we are being the advisors of the company, because ultimately what happens, already decision is taken, then only they will come and tell, sir, idu pannirkom. Okay, klar. Actually, you should come to us before you take a decision. What happened is, from the head office, they got an instruction saying that do a cross-charge invoice. From Pondicherry, you raise a service invoice to Chennai for 1 crore. 18 lakhs is the CGST. Now, the CGST lying in the, that means the ITC lying in the Pondicherry branch has come to Chennai now. Chennai has plenty of transactions, crores and crores of transactions. They availed it. Is there any problem in this? Why should I go for a refund? I will do a cross charge and then close it. No, what is the problem? Look at this. Sorry? Payment doesn't matter, sir. Who said that? Because it's a rule 37 clearly says if it is a distinct person, payment is not required. It's all same bank account, na? So you cannot. Yeah.
They are related party. So
Yeah.
their valuation will be subject to that, those rules which we discussed.
Oh, happa. Valuation rules, sir. Now only we discussed it. Yeah, valuation rules will be there. Assuming that value is all pakka. Okay. I'm reaping some benefit now. Yeah. So, what is the issue here? It is not related to valuation. Assuming that value is correct. Look at section 16. I'm just going a little beyond. Section 16 clearly says you can avail input tax credit only if you receive the service or goods or service. There are other conditions. Credit ledger, it should reflect in credit ledger, and payment, that thing should have, return should have been filed. All these conditions are there. It should be used for further service. All these conditions are there. But look at one more important point. You should have received the goods or service. Have you received the goods or service? Not even a single person is there from Pondicherry to provide the service. You cannot, because you have not received the service. First point declined. Typical Indian question. How do the department finds this out? Very simple. It's a 1 crore transaction. So far in the history, you have not even received one particular invoice for service from that particular branch. Now it is a clear fraud. Instead of routing through refund is also not completely blocked. You just raised a cross charge. Not possible. Not even. How can you do that when there is not even a single employee? Now you may be asking, how do we find employee? Professional taxer. You will pay who are all available, because that is very, very important as far as cross charge is concerned. So who are all the employees located in which places? Chennai, we are paying professional tax. So you can find out this. Not even a single employee. They did cleverly. They said, sir, everything is perfect, sir. We did everything. They themselves filed the return for Pondicherry. They themselves availed the credit, everything. We said, no, you cannot, because you have not received the service. We told them, we'll give it in writing. It is not possible. So they reversed it finally with the interest, penalty, everything. They paid it and they closed it. Now, that is what I would like to make a point there. If the company branch is closed, no way to get the ITC refund. You stick to this point. One, you can claim refund only if it is a refund of input tax credit, only if it is a zero rated supply or inverted duty structure. That's all. Thumb rule. You don't even think about any other concepts. Why do you get confused? Not even single concept is given. So whatever the client has said, no. Point number 1, is it a zero rated supply? No. No refund. Or is it inverted duty structure? No. That's all. You answered that. Now, let's come to one more point with respect to the cash ledger. Yeah, because last time there was one participant, he asked me, TCS, which is effective from 1st of October 2018. Question is, can that be claimed as a credit? I mean a refund. Can that be claimed as a refund? Can the TDS and TCS be claimed as a refund? It will be in cash ledger, so you can avail it. Any other views? Any other views? Lunch time no agla. Any other views? It is actually correct because it's actually TDS and TCS will come to the electronic cash ledger. There is no prohibition for claiming refund for electronic cash ledger. Okay. Now, we already discussed all this, export of goods or services. You can see all these cases. We already discussed this. What are all the refund situations? Applies to SCZ, then deemed exports, refund taxes made by UN and embassies. UN and embassies, at least for the other than the people, normal registered person, they are giving 2 years. For these people, they are giving, a very short time, and then that also they extended it multiple times. Indian scale law puriyala hai. எப்படி யூஎன்ல இருக்கிற இந்த எம்பசிக்கெல்லாம் அப்படியே லா புரியும், கொஞ்சம் டைம் ஆகும் அவங்களுக்கு புரியறதுக்கு. ஸோ தே எக்ஸ்டெண்டட் இட் ஃபர்தர். நவ் ஸ்டில் த டைம் இஸ் அவைலபிள் ஃபார் தம் ஃபார் ஃபைலிங் த refund application. Refund arising on account of judgment or appellate authority. So they are going for an appeal and refund is arising on account of that. Okay. Next is refund of accumulated ITC on account of inverted duty structure. Next is refund of pre-deposit. Pre-deposit means in case of a casual taxable person and non-resident taxable person, for them to get it registered, they have to pay a deposit. Whatever the estimated tax liability, they have to pay to the government, then only the registration can be done. After that particular period is over, after filing the returns and all, if anything which is lying in the cash ledger, we can be claimed as a refund. Now, excess payment due to mistake. Somebody asked me. Yeah, definitely you can. Refund on to international tourist only for the goods. That international tourist has gone to saloon. He has charged some 18%. No. Only on goods you can avail the input refund. Refund on account of tax paid on advances. See what happens is sometimes you will get the advances. Okay, advances you will issue advance voucher. Voucher also you will issue under Rule 50 of the GST Act 2017. Now, refund when you are not providing any service, subsequently you understood that that advance you tax is paid, but you are not providing any goods or services or something like that. Then you can go for a refund. Sales return, no sir. Sales return, no. Only in case in case of advance paid. Advance. See, for example, a construction company where they are receiving the advance and subsequently they said no, they are not taking up the project. On the mobilization advance, they would have received say 1 crore, 18 lakhs would have been paid to the government and subsequently the project has dropped. Now you can go and apply for a refund.
Similar logic for sales return also.
No sir. Sales return is nothing to do with advance.
I paid taxes on my sales.
Yeah.
My purchase.
Sales return, I will clarify that. Sales return, you can issue a credit note. Yeah, correctly. You can issue a credit note and reverse the credit. So no problem. So for example, you are raising 100 rupees as the invoice. Subsequently, by way of credit note, you can do it. You don't have to come to refund mechanism to claim that. I am talking only about advances.
I have paid that.
You can reverse it based on credit note, provided you are issuing that credit note pertaining to that invoice within the due date for filing the return under section 39 for the month of September or annual return filing date, whichever is earlier. That is, for the last year it was 25th of October 2018. Within that you should have issued. Now post that, if you are issuing, either it will be a supply or you can consider it as a financial credit note. Financial credit note means what? Without GST component. Okay. Now, refund on CGST, SGST paid by treating supplies intrastate. This is what the section 77 and 19 of the CGST Act and IGST Act respectively is talking about. Refund in balance in electronic cash ledger. Now, yeah, please.
During merger of two business, instead of paying ITC to connect for transfer of balance of ITC from that group to the
Very good question. His question is, I'll tell you, sir, it's literally happened for one of our clients. A manufacturing unit and trading unit both got merged. I'll tell you the intricacies involved in it also. Because in the company law tribunal, they will give the date with retrospective effect. Correct? You would have seen that in the agreement, but the closure as per GST would have done now. Correct? And balance sheet pata adunnu complicated. Both balance sheet would have been merged on 31st March. They will give you different TB only. Correct? So these are the issues. I'll tell you that. Let's answer. No, let everybody answer no. His question is, merger happened between two companies. ITC of, say for example, manufacturing unit and trading company. The manufacturing company merged with the trading company. Now, the ITC of that can be transferred. Okay. He has filed ITC 02. They claimed the credit. Whatever the CA certificate, everything has been produced, and then they got the credit. The credit has come to the electronic credit ledger of the merged entity. Can they claim refund? You answer it. No, 1 minute, sir. I will take your example. Can they claim refund? Correct. Perfect. They answered it. Now let me ask you one more thing. What is your further doubts?
No, I was asking whether the manufacturing company can claim that. Why it is
No.
answering-
Okay. Now his point is, can the manufacturing company can claim it before merger? Refund claim பண்ண முடியுமா? You answer it. Not possible. Unless otherwise it is pertaining to zero rated or inverted duty structure. They answered it. Anything else on that? No, right? It can be transferred. No doubt about it. It can be transferred. We have also transferred it. We have also certified that everything is eligible. So, yeah. Now, so you very clear, no? There is no refund as far as the input tax is credit concerned, other than those two sections which are prescribed under 54 subsection 3. Now, you have to make an application. If you are eligible, you have to make an application in RFD 01 form. Okay, within 2 years from the relevant date. Now, what is relevant date? Here can be confusion. Really, they complicated it further. So we'll see what is relevant date. Relevant date, because there are different situations, they gave the relevant date in a different manner. So you have to understand what are all that situations, then only you will be able to appreciate it. As on date, you don't have any problem. GST itself has come very recently. So this relevant date will not cross, even if the invoice is pertaining to 1st of July, still 1st July 2019, you have time. So, but generally what happens, all our clients will do it the last minute. 1 day the left over. So that time only these interpretations will have impact. Now I will tell you beautifully, take one example. Goods are exported by sea or air. That being the case, date on which a ship or aircraft leaves India, that will be the relevant date. Now, if you go to the definition of India definition says that 12 nautical miles, that special economic zone, economic zone, all these things. How do you find the ship which is exactly crossing that particular point? India is defined. It is not the Chennai port. You can find out when the ship is departed from Chennai port. But can you find out when the ship is crossing India? Not possible, very difficult. I inquired further. There is a mechanism where tracking of the ships are available. These are all very, very critical issues when it comes to the refund of huge amounts at a later point of time when they are applying the last minute. Because now it is not a matter. But you keep it in mind, they are talking the word India, because Chennai port to cross India it will take some time, at least 1 day or 2 days. That can be considered. That is the only point which I would like to make. Now, exported by land, date on which such goods passes the frontier. That is also very difficult. See, I'll tell you one example where I've been to Kutch, that means Gujarat-Pakistan border, for one of our construction companies' work. So I've been to that particular place. It's very, very difficult. You won't believe. The procedures are in such a manner. It's a barren land first of all. Second, when you go, you have to travel for 3 hours, 4 hours, then only you will reach one destination where all military people will be there, security forces will be there, and they will take your ID card and everything. It will take 1.5 hours for procedures. Then further, if you go 10 kilometers, 20 kilometers, Pakistan. Okay. Now the case is the project is happening there. When you go there, first point, the thing is every day that is report is going to President of India. These are all very new information for me. Every daily report of this border information is going to the President of India. I got surprised. Second thing is, if you don't come back within the time which is prescribed in that slip, they have every right to shoot you. Nobody will question. It's really happened in the previous day. One guy from Kolkata got shoot. It's literally happened. So we got really afraid. First thing, if you're missing, they will ask the company, responsible person has to sign. They will ask, that guy also says, I don't know, that's all gone. Whoever 10 people gone, 9 people came back. Night, if you're coming, that's all. You will not come back to India. So this is literally it's happening. So now, let's look at practical point of view. How do you know you're crossing the border? You may be asking, how can you go to Pakistan? I'll give you a typical example where one of our company's product, machine, that is a sophisticated machine which is exported from India to Bangladesh by road. By road it is exported. When they are exporting, first thing, e-way bill, right? E-way bill, you will have an issue. You have to mention the pin code. Bangladesh pin code eppadi kodukkuradhu actually. It was very difficult for us. It came to us. Nowhere it is defined in the GST or a circular or anywhere what is a pin code to be given. Applied our logic, we said, you go to Kolkata, it will be going through Kolkata. So Kolkata, take the border, take the pin code of that, put it to calculate the e-way bill validity. So now, how do you find that it is exactly the time when it is crossing? That is the time, the date on which you are crossing the frontier is very, very relevant. So these are a couple of practical issues which you will come across. Theoretically, it is very easy when it is crossing. But when it is exactly crossing is very, very relevant after couple of months. Now we are in December, Jan, Feb, March, April, May, June, July. After 6 months, it is very, very relevant because then 2 years will be completing. And I have given all the examples, what are all the relevant date. You go through it. In case of any doubt, get back to me on this because of the pause of time, I am just moving away. Now I am skipping this interest on delayed, the power to notify agencies under section 55. Government has every power to notify UN agencies. Okay, any UN agencies for that matter. And interest on delayed refund. Typical thing. If refund is payable to the assessee, it will be 6% per annum. In case of court or tribunal order, and even after that they are not, that is final order, even if after that they are not releasing the refund, then it will be 9%. That is only difference. Something like court told but they are not following, then it will be 9%. Now, this was a little interesting for me. When I read the refund provisions initially, I completely got confused. Why? 55 says refund is available. 54 is saying refund is available. 56 says, 54 says refund is available. 55 says UN agencies. 56 says interest also will be paid. Okay, happy. 57 says whatever the refund, it will be credited to the consumer welfare fund. Then why am I applying for refund? I'm taking the pain of filing the forms, everything. Finally, they told me initially 54, you can claim refund. When I come to 56, they say, no, I'll pay you interest also. 57 says, that will go to government. It was little tricky. The default provision is the refund will go to consumer welfare fund, except in cases of the following cases. That is also given. So all this in our cases, whatever we discussed, it will come back to us only. Otherwise, in some cases where unjust enrichment, now what are all the amounts will go to a consumer welfare fund. Already you applied for a refund, but the benefit of that has already been transferred to somebody else. Already unjust enrichment. There should not be an unjust enrichment. That means you cannot avail the taxes 2 times. So if you have availed it and then you also transferred the benefit. That means you availed the input tax credit, and then you cannot go for a refund. If you are going for a refund, that a refund will be getting credited to the consumer welfare fund. And administration of consumer welfare fund and all, I am not taking it up. Now, let's look at one important provision. Inverted duty structure. I would like to spend some time on it. Inverted duty structure is something like this. I have an input. Say for example, my input is having rate of 28%. My output rate is 5%. I'll repeat. My input rate is, inward supply rate is 28. My outward supply rate is 5%. Don't you think that over a period of time, I'll be accumulating that difference between 28 and 35? It will be 23% will getting accumulated. In this particular situation, government said, yes, we understand it, we will refund you the amount. Okay, now let's complicate it. I purchased the goods for 1,000 with 18% tax rate. Okay, I sold it at 100 rupees. 18%, okay, say for example, 18% tax. Can I apply for refund? Obviously, it will get accumulated. Na? I'll be selling it at 100 for 18 rupees is my liability. When I purchased it was 1,000, 180 rupees is lying in my credit. Assuming that I am continuing this practice over a period of time, can I go for refund under section 54 subsection 3 under inverted duty structure? No? Why no? Correct. Valuation issue is there. That will be dealt under 15. That's a very good point.
But rate is same.
Correct. Rate is same. That is an important point. You have to look at only the rate. Don't look at the value. Now, I'll tell you another example, complicated one. I am manufacturing the laptop. I'll be having multiple materials, right? It's not that one material. Say for example, laptop is 28%, screen size is 17 plus, falling into 28%. Now 28%, but so that being the case, will we be able to take the refund under 54.3? Laptop is 28%. No, you cannot, because that is the highest rate. Refund is possible only 18, 12 or 5 or 3 or whatever it may be the rates which are applicable. So in case of 28, don't think of refund. Now let's look at your rate is 5%. Laptop rate is 5%. For the time being, you take 5%. Your raw material 1, there are 5 raw material. Raw material 1, 28%. Raw material 2, 18%. Raw material 3, 12%. Raw material 4, it is 5%. Raw material 5, it is 3%. Assume gold.
Exclude 3 and 5.
Sorry?
Exclude 3 and 5. Claim for this.
Okay. Sorry, saying exclude 3 and 5. Claim everything.
Claim for this.
Claim. See, you have to look at one important point. This refund under section 54 subsection 3 is an option. Assuming that you are able to utilize that credit, well and good. No problem. And you should not look at only one particular month. Okay, this month it got accumulated. If you are able to utilize it in the next month, then no problem. What you have to look at it is accumulation of credit over a period of time. By doing the business, I find that monthly it is getting accumulated. The curve should be like this. That being the case, you can easily identify who is causing the problem to the company. Which input tax is creating, input is creating the problem. 1, 2, 3, 4, 5. Out of this, as Sir said, you cannot, under any circumstances, you cannot take 3% and 5% for refund. You can look at the other inputs on which you have paid higher rate. Say for example, 18%, 12% and 28%. If you are able to identify one particular product and if you are able to apply it, you can apply for refund on all these 3. If you look at RFD 01, one-to-one matching is also requested at the time of application. So as a manufacturer, I know which product is causing me the accumulation of credit. To answer the question, any rate other than 3 and 5, you can go for a refund. Okay. Now, inverted duty structure I told you, every time there will be an amendment. When they initially said, they said outwards taxable supply of goods. Outward supply of goods. So initially it was not available for services. Please be with me because I am going to confuse you, because there are a lot of confusion as far as outward is concerned, inward is concerned. There are a lot of things. First point, when the outward is concerned, supply of service was not there. Subsequently, there are big hues and cries. Everybody said, we should also be included and all. Then they brought the amendment and they included supply of service also. Okay, this is first point. Second point, if you look at 54 subsection 3, it says any input which is used for the purpose of the outward taxable supply. So input is clearly defined under 2 subsection 60, 61, 62, 63. Input tax, everything is defined there. There it clearly says input means any goods other than capital goods. So you cannot apply for a refund of capital goods, first point. Second point, input service is different. Input is different, input service is different. So whatever the input service being used, you cannot use it, you cannot apply for a refund. Is it clear? You can input, the word which they have used is input. Input is clearly defined under GST. So, excuse me. So, you can avail input only, not input service or capital goods. So, there also there is a blockage. This is one point which I would like to make it very clear. And see, in case of recently we dealt with one refund case where what happened, it was lying in the credit ledger, cash ledger. We applied for a refund. We thought, okay, it's a cash ledger. No, immediately the fund will automatically come. Where? The department came and started asking, okay, you are claiming for this amount, show me the corresponding payment for that particular month. We had to substantiate a lot of things to get the cash ledger payment. So it's not that easy. First point. Second point is, there is something called, they are saying that they will release the payment within 7 days. 7 days or 60 days as the case may be, they will say within receipt of your application. But please note that date will start only from the acknowledgement date, RFT 02. If you look at practically, what happens is the assessing officers are not accepting it. They are saying, this is shortcoming, that shortcoming, this shortcoming, this short. The moment they acknowledge it, the time starts from that date. So that's why they are not acknowledging RFT 02. So please ensure that you are getting the RFT 02 acknowledged by the party, I mean the assessing officer, proper officer. Now, everything is online. Should I file the manual application? Yes, as on date, that is the scenario. You have to get the acknowledgement from the proper officer. Then only the time starts. Now, there is a provision under the GST Act, that section 16 of the IGST Act giving 2 options. One is with LUT, claim ITC. Without LUT, pay IGST. Tax cannot be exported, so come for a refund. There it says if you are paying GST, IGST on your outward supply, then if it is a 0 rated, you come to me for refund. I will process it immediately. That means they are saying provisional basis I will give you 90%. Okay, 10% I will withhold. So I will give you 90% immediately. It will be credited. Now, some people are using it for the working capital issues based on some different calculation. They are applying it. It depends upon the client's requirement. Now, it comes. Can the commissioner withhold your refund? Okay, refund is approved. Now, can they withhold the refund? Yes, they can withhold. Reason being, one is you have not filed the returns. Second, you have not paid the taxes. Third, commissioner feels that there is a fraud which is happening in this refund, he can withhold it. So, they can withhold the refund. The formulas, everything is being given. Okay, so order sanctioning refund. So everything will come, and then once it is interest also, we already discussed all this. So that's all mainly about the refund. If you have any doubt, you can ask me. If it is something related to procedural thing, it requires some time to explain, because how to go, already it is confusing. Procedural, if I explain from here, you will understand nothing. How to apply the form RFD 01, you go and apply. If it is through, you will get the refund. Now, one most important thing which I would like to tell is zero rated supply. In case of service, the relevant date starting from the date of receipt of foreign currency. One of the important condition under 2 subsection 6 of the IGST Act that defines supply of export of service. One of the conditions is realization of consideration in foreign currency. So unless you get that money in foreign currency, you are not eligible for refund. Very clear. Export of goods, no such condition. Taking goods outside India is an export. So you can go for a refund in such cases. Immediately upon export. Now, can I ask you one thing? They are saying 2 years period. Can I apply for a refund on a monthly basis, daily basis, weekly basis, bi-weekly basis, yearly basis, more than a year? Sometimes portal decides what the law is talking about. Law is saying something, portal will tell. No, law and all, parliament are different. I am the lawmaker, I will tell you. Even if you try to press it, it will not work. So ultimate decider is portal only. Now let's come to the portal issue. What does portal says? Act clearly says you can claim within 2 years from the relevant date. No restriction as far as the application is concerned. You can do it on a monthly basis, you can do it on a daily basis, but it will be a compliance issue or administrative issue. So monthly basis, weekly basis, or whatever the way you want, you apply it. No problem, there is no restriction. Previously there were restrictions. Even financial year also there is no restriction as such for the, as per the act. But we don't know, depends upon the portal. Portal will say financial year select na, okay, that's all gone. Month select na, gone. Then the portal will tell monthly only you can apply. But as on date, there is no such restriction. You can go ahead as per the act. Now, what is the minimum amount for refund? Minimum amount should be, you should apply for minimum 1,000 rupees. Otherwise, the refund will not be processed. So that also I put it here with an old currency, so that that anyway doesn't have any value now. This is all about refund. Any questions? Offline? Okay.
Online is not going through, so I can go offline.
As on date, see RFD 01, initially there were a lot of portal issues. So they came and said, no, you can even file manually. Now they are saying, no, anyway portal RFD 01 is available, so you can go for that. Can I take your question after that? Because it's something to do with procedural, because many people will not be interested in this. Yeah. Any provision related, because procedure means I have to answer for 15 minutes for one query to explain. Portal, you go there, give this, then that will be a little difficult. I will take only the technical questions. Yeah, please.
Before breaking for T, you said some JDA, GST.
Can I take it little bit later, sir? I have to complete one more point. I will take you through that. Yeah. Just remind me once at the time of finish. Yeah.
We are in the line of facility management.
Consulting.
Facility management service.
Okay.
So we got an order from ACC.
Okay.
So can you ask my supplier to put that 0.5%?
No. 0.5, where is it coming from? It's only for the deemed exports. It's you refer notification number 40 and 41 bar. 40 bar 2017, 41 bar 2017 came in August. That clearly says, I think it is 22nd of August 2017. That clearly says when you are eligible for 0.05. It's actually not 0.5, it's 0.05. That means it is 0.1 effectively, CGST, SGST if you add. So you go and refer that notification. It is only for deemed export. There are certain conditions which are to be satisfied. I don't want to confuse you. There is one point which says you should be member of Export Promotion Council. If you look at the export industry, nobody is member of export promotion. I'll put it this way, because there are plenty of export promotion councils. If you go and apply a promotion council membership, it is costing 10,000 rupees or 15,000 rupees. So if you go and get it, it is expensive. So everybody is member of IEFO, Indian Exporters Organization. So where they are getting, so will that be considered for the purpose of this? Little difficult. So refund application, everything will get, there is a potential risk, that is the only point which I would like to make. Any other questions on refund? I'll move on to composition. Yeah.
Is there any requirement that in every month, in a month in which credit is there, sales as compulsory as to be there?
Sorry, sir.
Is there any requirement that in the month in which credit is there, and exports should be there because credit is there in 1 month, maybe in July and August, and exports sale is there in later months, some December or January.
Okay.
So in that case, file monthly refund claim.
You can apply for a monthly refund, but you have to look at the formula which is attached to it, because it's not something which, because what happens is, when you do an export, you will have, you know exactly that, I bought this bottle and I am exporting it. I know what is exact credit available to me. There will be common credits. For that there is a formula. So based on the formula you arrive the number and you can apply for that, the refund.
Commonly, if I export both exports and if I have local sales.
Yeah, that is what the formula is given, sir. Formula is given under section, rule. Sorry?
The companies are doing 100% export only.
Then there is no problem, no, sir. You are eligible for entire ITC.
Monthly I can claim.
Yeah, you can claim monthly, no problem. There is no restriction. Okay. Yeah.
Can you please elaborate a little on the different duties, the structures and single export rate is there? Suppose
Okay.
and the input there are a lot of different duty structures, inputs are there.
Okay.
And we have only one export rate export. Suppose 12%.
But anyway, you would have applied for LUT and not paying taxes now.
We have not paid taxes. Not
So there won't be.
It's not about exports.
Can I just move on hold for a moment? Because it's taking some time. Because I have only half an hour to finish off composition levy. After that, I'll take your query. Okay? Oh, is that okay? Yeah. Now, composition levy, because wherever, it's getting extended, so I may have to stop because it's 11, 12, 40 or 50. Composition levy, another major topic, which is actually, if you look at the concept, it is very, very useful. But what happens is, the law is drafted in such a manner that it cannot be used by anyone. Otherwise, if at all you are using, you are at risk. Because who will use composition levy? Small traders who doesn't know GST very well, correct? So GST actors not even understood by experts. So there is a contradictory, extreme contradiction. I'll tell you a simple thing. The composition levy says, if you are doing a interstate supply, then you are not eligible for composition levy. You can do only for intrastate, that too goods, assuming that a small trader who is located in Salem or in Coimbatore, suddenly he got an order from Palakkad, nearby place. He will immediately send it. This is a state-to-state transaction. This will become intrastate transaction. He ceased to be a composition levy or composition dealer. What happens? The date on which he supplied, he ceased to be a composition dealer. Then from section 10, he will come to section 9. It's something like this. 9 is there. 10 is a privilege which is given to you. And the moment you breach it, you will fall back to 9. The 9 clearly says you have to charge at applicable rate. Now what happens? Pound that dealer would have charged 1%, no, he will not be able to charge. At least he would not even charge or collected the taxes. He will be paying out of his pocket. Now it would be probably 1% or 2% as the case may be. But now department will come and ask, you pay 18% or 28%. So this was a risk involved in it because of the ignorance of law. Second issue, see, initially when they came up with the rate, they said rate will be taxed on the turnover in the state. Turnover in the state includes exempted supply also. Turnover also. So for example, I'm having a medical shop. Okay. Assuming that the turnover is 1 crore. They are asking me, I mean the total turnover is 1 crore. 50 lakhs is my taxable turnover. 50 lakhs is exempted turnover because that product, that medicine is exempted. Government says pay composition rate on 1 crore. First of all, that is exempted. Now they are asking me to pay. So this was an issue, but later they changed the provisions.
Calculation of turnover we have to.
Now they are saying taxable turnover, but they subsequently realized it. Now they are saying taxable turnover. Because if you look at the turnover in the state, it includes exempt supplies. That is what the problem comes. Now they plucked it. They said no, taxable turnover. Now, composition levy. First question: composition levy, RCM is applicable or not? Reverse charge mechanism 9(4) before 13th of October 2017, because from 1st July till 12th of October 2017, RCM was applicable, transaction with unregistered party, right? Now, is RCM applicable for composition levy? Yes, correct. It's a registered person. They are also saying composition levy. They are saying notwithstanding anything contrary contained in the Act, but subject to 9(3) and 9(4). 9(3) talks about specified reverse charge mechanism parties and 9(4) unregistered party. First of all, I am not eligible to take credit. Now they are saying that you pay tax out of my pocket. These are all the issues with respect to this composition levy scheme. So that is why it was not popular to that extent. So then they say 1% of the turnover in the state for manufacturing, that means 1% means it will be 2%. This is CGST Act rate. 2.5% turnover in the state in case of restaurant services, that means 5%. And 0.5%, that is 1% in case of traders. We can call it as traders, but the word used is other supplies. Other supplies. So now let's look at the amendment which has come, which is not effective. Let me caution you, because there is an amendment to the CGST Act 2017. There is an amendment which is being happened, and it was approved by all the legislations, and now even the President has given the approval on 29th of August 2018, very recently. But all the states also have to pass this, because it's an act. If there is any change, states also have to change corresponding. Otherwise, SGST and CGST will be contradictory. Here it will be saying something, there it will be saying something. So they are waiting for that. Now, what is the proposed amendment, which is a very welcome movement? What is a proposed amendment? In the existing composition levy, they are saying even if you are doing a 1 rupee supply for service, you are not eligible for composition levy. So supply of service, you are not eligible for composition levy. Only for supply of goods only you are eligible. Now, can you imagine, it is very difficult that company will not be having any services, or the registered person will not be having a service. Even interest is a service. Interest, you deposited money, you are getting some interest. That is a service. That is why notification 12/2017 clearly exempted interest from that GST. Under section 11 of the CGST Act, there is a power to the government to exempt the goods or services. They gave a notification and exempted by 12/2017, exempted the interest. So that is a service. So assuming that you have some interest, I am not talking about SB interest. SB interest also, assuming SB interest, there is a view that it is out of personal thing, so it will not be a supply. But assuming that this is from your own business, you deposited the money and got some interest, then you cease to be a composition levy dealer. Now, the Act says you can go up to 1 crore. If your aggregate turnover is 1 crore, then you can go for composition levy. But now in the new Act, the amendment, proposed amendment, it is 1.5 crores. The welcome move is here. They are saying you can have supply of service up to 10% of your turnover in the state in the preceding financial year, or rupees 5 lakhs, whichever is higher. So they are saying up to 10% you can consider service also, or 5 lakhs, whichever is higher. So there is a service component also they are bringing into this. But please understand, this is given only for the goods dealer whose turnover, they are dealing in goods, but this is not available for service industry. Now, who are all eligible? Or I would put it this way, who are all not eligible? See, he is engaged in making supply of goods not leviable to tax under the Act. That means any goods which are not leviable to tax under this Act is not eligible. Say for example, high C sales, or consumption of alcohol, that means alcohol for human consumption, and he is not engaged in making intrastate outward supply of goods, or he is not engaged in making supply of goods through e-commerce operator who is required to collect tax under section 52. I feel there is an issue here. I felt and I found it because supply of goods through an e-commerce operator up to who was required to deduct TCS under 52. This provision came only on 1st of October 2018, just now. So even if you were doing a transaction through e-commerce operator, they are eligible for composition levy, provided you are not doing an interstate supply. Why? Because e-commerce operator were not required to deduct TCS under section 52 because 52 was not effective till 30th September 2018. Now, he is not a manufacturer of such goods as may be notified. They said, even if you are a manufacturer, I will not give you this exemption, I will not give you this option. It's not an exemption, it's an option. 8/2017, they issued three manufacturing items. What is that? If you are manufacturing the ice cream, and if you are manufacturing pan masala, if you are manufacturing the tobacco and manufacturing tobacco substitutes. Come to this too also, okay, don't stick to your ice cream. I know that it's a lunch time, don't stick to this. There are 3 pictures, not only one. So ice cream, tobacco or pan masala and tobacco. So these 3 products, even if you are manufacturing, you are not eligible for composition levy. It's very clear, okay. Now, other aspects, this I already told you, it was an option which is given to you. It was an option which is given to you. So the moment you break any of this condition, you will lapse that option. You have to come back to section 9. And you are not liable or you are not supposed to collect tax from the parties, from your recipients, from your customers. See, for example, you are charging 1 lakh. That's all, 1 lakh only. And you have to clearly mention some conditions. You have to mention that I am taking you through. But you are not supposed to charge GST. Then how will you pay? Out of that 1 lakh, you have to calculate 1% and then pay to the government. That is what the government says. So I will not be able to collect tax. This is first issue. Now let's look at this. I paid tax under reverse charge mechanism. Am I eligible for input tax credit? Act says no. You are not eligible for input tax credit. Whether you purchased directly from registered person, no input tax credit. Whether you paid it under reverse charge mechanism, you are not eligible. Still ITC is not eligible. And so if so assuming that you violated any of these conditions, I said no, you will fall to 9 and then you have to discharge your liability accordingly. So you have to be little careful when you are advising your clients for the composition levy. It looks very attractive, very beautiful outside, but you have to be like, it's something like a baby, you have to hold it every time. When you're telling your client that, boss, you go for a composition levy, you have to hold him till the financial year end. Not only till financial year, till he reaches or till he converts into section 9. Otherwise what happens? He doesn't know what is to be done. He will be doing interstate supply, he will be doing, services also. So you have to hold him like this and bring it and then help him out. Otherwise composition levy is not going to work. And next is, yeah.
B2C composition dealer, retailers are selling products, they are not eligible for ITC.
Yeah.
But customer is charged for the tax what they already paid out.
Correct.
So ultimately GST turns into a multiplication of taxes.
I don't say that way. See, for example, his point is, when I'm purchasing from a registered person, I pay tax. No, when I'm opting for the scheme, you are not allowing me to charge. So that is a very good point. That is the main difficulty in this particular situation, because your input tax credit, can you go for a refund?
No.
Let's answer this together. Can you go for a refund? No. First of all, that is not at all an ITC, because you are not eligible for ITC. Once it becomes ITC only, you can go for refund. Thinking about refund. It is not at all an ITC, you are not eligible at all. Because it's a blocked credit.
That's why share prices are cascading in retail sales.
Correct, possible. I don't know how many traders have opted for composition levy. Very less. I'll tell you one more issue to it. There was a notification, but 39/2018, which has come on 4th September 2018, which says forms to be filed for annual returns. 9 for registered normal registered person, 9A for composition, 9B for e-commerce. Now, assuming that during the financial year, I changed from composition to normal levy. Which form to be filed? 9 or 9A? Portal will decide. Portal will not allow you. I don't know how the portal is going to come. A portal will decide. Actually speaking, both to be filed. Then only it will be like effective. But I don't know whether that will be possible or not. We are waiting for that. Portal will decide. So whatever portal says, you do it accordingly. Now, please understand, composition is an intimation. It is not a separate registration. Registration, I will do it under registration process. There is a part B in the registration form where you can opt for composition. They will ask, do you want to opt for composition? You just tick it. If you tick it, you are eligible for composition. So it's only an intimation. So it's not a separate registration. And once you intimate it, it is applicable pan-India level. You cannot opt for a composition levy in Tamil Nadu, registered person in Bangalore, that means in Karnataka, composition levy in Haryana, normal person in Delhi, not possible. If you select intimation, if you opt for an intimation or opt for a composition levy in one of this distinct person, that means anywhere in India, it is applicable across India. Otherwise you cannot do it. Now, so once you give an intimation, do you need to intimate all the states? No. They are saying once you intimate one state, that is sufficient. It's an online portal, everything is linked based on PAN. One intimation is sufficient. That intimation is valid. Do I need to give intimation every year? No. You don't have to give intimation every year. That intimation, whatever you give it, is valid till you withdraw it. So you don't have to give a different intimation in different financial years. Now, when can you opt for a composition levy? Can I go and then in the middle of the financial, now we are in December, can I advise some clients to go for composition levy? No. You have to opt for composition levy in the beginning of the financial year. So say for example, you have to apply in March month. From 1st of April, you can go for a composition levy. Exception, for the last financial year, they told up to 28th of February, you can go for a composition levy because it was keep on delaying. They said you can go for a composition levy even in the middle of the financial year. But here onwards, it's only in the beginning of the financial year you can go for a composition levy. Now, composition levy is not applicable for casual taxable person, non-resident taxable person, and what are all the conditions? See, the composition dealer has to mention that composition taxable person not eligible to collect tax on supplies. This he has to mention. He has to clearly mention in his invoice. He has also mentioned composition taxable person in his invoice. These are all the disclosures which are required under the rule 5. Now, what is the validity? This already we discussed. Rule 6 validity, this all we discussed. And what is the rate? Now, what is the rate? Manufacture, other than manufacture of such goods as may be notified by government, that is 8/2017, 1% of turnover in state. See, whenever the draft, I don't know, because there are some loopholes in or some methodology which they are adopting in drafting is to be improved. I don't say it is flow, there's a flow, but it has to be improved. Because when the law is drafting, you have to be very, very careful whatever the words which you are using. Because Indians are grandfather of interpretations. That is why we have so much of litigations. So why do you give a room for interpretations? See, turnover in state. Okay, turnover in state. They found that union territory is not there. They found it little while later. So 1st January 2018, first notification, New Year gift. It came in with effect from 1st January. Notification number 3/2018. They said no. It is turnover in the state or union territory. Now here I told you the value includes exempted supply also. Because of that, it was previously 1%. They subsequently reduced to 0.5% with effect from 1st January 2018. Supplier making supplies referred to in this. This is restaurant services. It was 2.5% rate. There is no change. But the wording which they used is they changed it to turnover in the state. They used it turnover in state or union territory. Any other suppliers, it was 0.5% of turnover in state. This actually they changed it to 0.5% turnover of taxable supplies of goods. Because here there was an exempted supply, so they changed it to taxable supplies of goods. I wrongly told, it seems here the exempted supply. No, it's actually here it is exempted supply is also included, but here they are saying 0.5% of turnover of taxable supplies, because this is change is being made in the notification. So you don't in that pharmacy case, if you say that 1 crore is the total turnover, 50 lakhs taxable and exempted. Now with effect from 1st January 2018, he has to pay composition rate only on the taxable turnover, not on the composition. Till 31st December 2017, it was on 1 crore. Now only whatever the monthly turnover, on that he has to pay 0.5%.
General rate itself is 5% or sir, without ITC.
Sorry sir?
For restaurants, sir, the general rate itself is 5% without ITC.
Very good question. I like it. His point is, normal rate itself is 5%. Restaurant, its normal percentage itself without input tax credit 5%. Composition means 5%.
I can collect, no.
1 minute sir, let me just explain to everyone. If you are going for a restaurant service, rate is 5%. You charge 5%, you cannot take input tax credit, only one condition, because initially it was 18 and all, then they reduced to 5. Composition says 5%, but you cannot charge no input tax credit also. Which one is beneficial? Charge and avail. That is why you can, no, you cannot avail, but at least you can charge. That is why you can see restaurant services, most of the, I think to my knowledge, whatever I have seen, nobody has opted for composition, because why should I pay out of my pocket? So this was the thing. So most of the restaurant services have gone for the other method only. Very good question. Now, restaurant service itself is a big issue, sir. There are plenty of AI ruling which are coming. See now you will not be surprised. All small cake selling shops and all, if they are keeping 2 tables or 1 table and 2 chairs and changing the name as previously, say for example, ABC Mithai, now it will be ABC Mithai Restaurant. Same product, nothing, 1 table, 1 chair. Because that AR is little confusing, because one guy has applied for an AR ruling. They said if it is a restaurant service, then it's fine. Restaurant means what? If you are keeping 1 table and chair, that's fine. There is no number of chairs and tables to be kept. So if it is a manufacturing of cake, assuming that it is 18, now if I am keeping 1 chair and table, it will be only 5%. Which one is beneficial? 5%. Correct? That is what the AR is saying. So AR is another area where you can explore, because it's a beautifully they will give some sort of explanation. Most of them are not acceptable to us. Some are not at all in line with the Constitution or the GST Act, but we have to live up with it. Now, any other questions? I think the composition is also over. Any other questions?
Sir, the JD and GST.
I will take it up, sir. Let's finish off composition. Yes. The moment, say, I told you, sir, there are certain conditions which are attached to composition dealer. Say, for example, you should not do intra-state supply of goods, or you should not do supply of service at all. The moment you cross these conditions, turnover increase. Now, I am telling the basic things. To turnover, there are plenty of things like that. Turnover is increased, as I rightly mentioned, turnover is crossing 1 crore as on date, 1 crore. If the new amendment comes, it's 1.5 crores, turnover crossing. The moment you are doing interstate supply of goods, providing services, casual tax, so in all these cases you are not eligible. Then you cease to be a composition dealer. Yeah. 1 minute, sir. Sir? Yeah.
If I am going to 1.1 crore,
Yeah.
then for that 0.1 crore only I from the
Yeah. Correct. No, his question is, I am a composition dealer. Till December, my turnover was 1 crore. Now for the next 3 months, it's 50 crores. 50 lakhs. Now I should avail. Is it something like retrospective effect or prospective effect? That's what you ask. It's a prospective effect only. The government has given you the option up to December.
But whatever the
Yeah. There are conditions. Very good.
Tax you have to pay.
Yeah. So there are some more conditions attached to the procedure when you change from composition to registered person and registered normal person to a composition person. There is some sort of procedures which are required. Just keep it in mind that the procedures are there. Pause of time. I'm just stopping it. Any other question? Yeah, please, sir.
Suppose we are selected for 1st April as composition.
Yeah.
So totally during the year we cannot come back to normal.
You can come back for a normal.
Without any insurance.
Yeah, you can come back. You can see his question is, can I voluntarily come back for composition to normal? Yes, you are very well. You can come back. There is no restriction attached to it. Only the vice versa is not possible. Registered to composition is not possible. Composition to registered is always possible. Government is happy. No, they will get more revenue, so they are happy. Any other questions?
What was the reason to allow for restaurants to be in composition where no other services are allowed?
To answer that question, we have to go beyond GST. His question is, why are you not allowing services for composition except restaurant? See, you look at the last service tax return. The revenue of the government, initially it was from the excise duty and all. The moment they introduced in 1994 service tax, introduced 4. Now look at the revenue which is generated by service tax. It came to a point which the service tax was taking over the customs duty, excise duty and all. So it has come to that stage. So the government is purely relying on the service industry. The moment you allow them to go for a composition scheme, look at the impact which the government, now they are getting 1 lakh crore monthly. If you give an exemption, if you give a composition levy to services, it will fall down drastically to 50 lakhs, 50,000 crores. Precisely. That is why they are not allowing services who go for a composition. See, assume that you are a CA. You are charging 18%. Now if you allow them, we will charge only 1%. 17% loss to the government. That's why they are not allowing. Yeah. Any other questions?
Sir, this 1094 RCM is there.
Yeah.
That is still not applicable for this composite dealers, no?
It is up now because.
It is being suspended now.
Yeah.
So it's still such time.
Correct.
But the provision starts subject to provisions of section 93.
Yeah.
This composite
Correct.
So pay tax. But still this department will later come and ask that no, 94 is not applicable for composite dealers because they are paying 1% only tax. So it was structured in this way. So later will they come and ask us to pay RCM under section 94? Sir,
No. See the 9.4, the Act section says 9.4 is applicable to composition dealer. 9.4 for every registered person, it is suspended from 1st of, or I would put it this way, postponed to some other date with effect from 1st of or 13th of October 2017 because that notification came on 13th of October 2017. Now they cannot come back and then invoke that. Now second point I would like to make is, in the proposed amendment, they made 9.4 changes also. I don't want to discuss that, but you just go through it. 9.4 has been amended slightly. Okay. Now, any other questions? Can I take up that? Yeah.
Composite dealer can purchase the goods from the unregistered dealer?
1 minute. Come. 1 minute. What happened? 145. No problem. I can manage. This is the first time SARC is giving me more time. Lunch is on the way. Normally they will give a note because we have, we know clearly that when we have to close it. So we used to close it at 1:15 and all. This is the first time coming up and saying traffic jam, food is not yet come. So we'll discuss at that time. Anyway you can utilize this time. Even if you go out, you will not get the food. Yeah. So yeah.
Actually, you don't know if registration, I have a 4 states my business. If one state I have option for composition means everywhere I have to take.
Yeah, definitely.
So in this Tamil Nadu I have a goods. I
Yeah.
am supplying goods.
Yeah.
But in Calcutta it is in service.
Yeah.
So it won't be.
No,
composition.
you are not eligible because you are providing service. His question is very beautiful question. Chennai I am supplying goods. Calcutta I am supplying service. Can I go for a composition levy? PAN based No, because once you opt, everywhere it should be applicable, but Kolkata will say, no, I am providing service, I will not allow you for composition levies.
Same thing applies for the turnover also. Suppose another branch.
Yeah, correct. See, the 1.5 crores turnover is talking about aggregate turnover. Turnover across the country for the single PAN. So they are not talking about state. For the applicability of composition, for obtaining that scheme, aggregate turnover is important. Sir, the Act says supply of service. Okay, whether it is exempted or taxable is not a matter. Even if it is exempted, you are not eligible. Why? Because they are using the word supply of service. Had they used the word supply of taxable service, then I would have said yes. Now, unfortunately, they are talking only about supply of service. Any other queries?
Can you throw some light on the refund for inverted duty structure?
Yeah, now I can take up your questions. Yeah.
Multiple ITCs are involved, multiple rates of
Yeah.
tax credits.
Yeah. His question is, yeah, just correct me if I'm wrong on your query. His question is, we discussed one example, right? One outward supply rate, 5%, multiple inward supply rate. That's what you're asking, right? Your query is, how do we find out?
How do we find out? Suppose my output rate is suppose 12%.
Yeah.
So in my input 18% also may be there.
Correct, absolutely.
Maybe there 3%.
Absolutely. The actual exercise which you have to do is, first point, remove your service component. Input service ITC accumulator, remove it. Okay, now I'll tell you practically because we have some time. Remove your ITC service portion. Remove your capital goods portion. Why? Because the capital can also cause huge ITC accumulation. Because I have seen some cases where because of capital it's getting accumulated. Even if you remove these two things from every monthly return, and remove your tax less than or equal to 5%. So you have three buckets. One is capital goods, one is service, one is the rate which is equal or less than that. Remove these three input services. Look at the balance. You take monthly trend of that. Then you can find that there is an accumulation. If there is no accumulation based on that, you will not be eligible for refund. Because of input service there is an accumulation, you are not eligible. Because of capital goods there is an accumulation, you are not eligible. Only if there is an input which is contributing to the outward supply, that only you are eligible. That you have to take the trend. Try to utilize it if it is possible. If it is not possible, apply for a refund. Last mechanism, yeah.
So now if I have input services and I'm exporting input services, then I would pay only GST and avail pay GST and avail that ITC, no sir?
Yeah, correct.
And claim that tax paid as refund.
No, that's
then I won't go for that letter of
I just wanted to make one more point. ITC, I told you that, refund, ITC is eligible, right? ITC is eligible. Now, two cases I said. One is inverted duty structure, one is zero rated. Now, there is one more condition to it. That if you are exporting the goods with the payment of tax, you can go for a refund, right? With whatever the tax paid. Again, you cannot go for ITC on the same thing. It is a double benefit. So government also clearly saying, if you are going for a outward tax paid refund, you are not eligible for input tax credit. See, 1000 rupees is my outward liability. GST I paid. I already utilized my input tax credit to the tune of 800. Now, I am also applying for 1000, also applying for 800. Will it make sense to us? There is an unjust enrichment. So government said no.
Then in a year, how to do it, sir? For some month, I have paid tax.
Yeah.
Particularly in 4 months, my LUT.
It's a computation is based on monthly basis, sir. So computation you can do it on a monthly basis. You can arrive it.
How to match input with the monthly?
Bit difficult. There is a question that whether I can go for a payment of tax now, this month. Can I go for a payment without payment of tax next month with the LUT?
Sometimes.
Yeah.
Not deliberate, my LUT got expired. So I have
Fine.
paid tax.
No, in practically there are companies who are looking for this option to maximize this working capital. See, I have an LUT. If I go for an application of refund of input tax credit, it will take some time. Now if I go for an immediate refund, the outward, if I pay it and then get it, I'll get it immediately. So some people are exploring this possibility. There is no restriction as such imposed by the Act. There is no restriction imposed by the Act as such. But you have to see the practical implication, because you have to also consider one important point. This is outside the GST. Consistency when you are applying the provisions of the law. That is the only point I would like to make. There is no restriction, but keep it in mind, at least 1 month you opt for that. 1 month you opt for this way. There is no restriction. Any other point? Can I take this JDA? Yeah.
JDA and GST and JDA, landlord or owner's cost, landowner's cost.
Okay, I will take up this question. Good that we got some time. JDA itself is a separate session. I know that all of you will be able to appreciate, because everybody would have seen in the construction industry, JDA is a model which is developed and prevailed over a long time period. In JDA, what happens is, there are 3 main parties: the owner of the land, 2, the developer, the builder, and then the customer. Now what happens is, in the JDA agreement, this landlord will say, the landowner will say, assume that it's a single owner. You can extrapolate it, because there will be some associations who will be going for these things. But for a time already confused, no? So we'll take a simple one. Individual, he's saying, I will give my land. Say for example, the land is located in Nungambakkam. Land is the major cost for a construction industry. Because if you look at the construction average rate, it would be hardly 1,500 or something like that. That is the approximate rate for per square feet rate. The major cost will go to land. That is why they gave 1/3 exemption for the value of land. If the transfer of building, the construction of flats and all, if it involves transfer of land, the value can be reduced by 1/3. So you can take, that is why the effective rate is 12%. Because it's actually 18. If you take 2/3, it is 12%. Now, what the landlord will do, the landowner will do, he will give the land to the builder. Will say that you take this land and give me 50% of the flats which you construct, and 50% of the 50% of the flats you give it to me. Because I was correlating, there was an AR ruling which has come recently. It's a very beautiful AR. You know why? Landlord has applied. It's a Karnataka AR ruling. Parallelly, builder also applied. Landlord applied, asking what is the time of supply, whether it is taxable, etc., etc. Builder simultaneously applied, what is the value of supply, all these things. It's a Peter, the applicant name is Peter, and the other party's name is some construction company. I'm not able to recollect the exact name. It's a Karnataka AR ruling which has come very recently, maybe 3 days, 4, 5, 6 days or something. This AR ruling, they did the same thing. So I will correlate both. Now the landlord will transfer. So in that case, what happens is, landlord give the developmental right to the builder. When they give the developmental right to the builder, the Act says, the notification 4/2018 says, you pay the tax at the time of receipt of the constructed flat. Assuming that you are getting 50 flats, at the time of receipt or allotment letter which you receive from the builder, at that time you pay tax. So time of supply is clearly given. Landlord is transferred. So we'll take the first point part. Landlord is transferred. Time of supply, when to pay tax? That is at the time of, after the construction 2 years will be over, and he will be allotting the flats. At that time only tax should be charged or given to be remitted. Second point. First of all, am I liable for GST? You only told that sale of land and building is not part of GST. Correct? Is it constitutionally valid? Now saying that development right shall be taxed. This was the question. Many representations were done, but now the settled position is not settled, I don't say, but the position is developmental right is not a sale of land and building. I am also supporting that view, because sale, that's all. You cannot consider developmental right. Developmental right is different, so it is taxable. It is taxable. It is a supply. Now, first point, builder, the landlord or owner has transferred. Supply, yes. Time of supply, at the time of allotment. Now all these things are done. What is the value of supply? That is the third point. What is the value of supply? Now what is the value to be taken? AR was little unclear about it. They said what is the agreement value, whatever the agreement value, but you look at the other practical perspective. 50 flats have come to you. 50 flats would have been sold to the third party. So there is a rate which is prevailing. So you adopt that for avoiding litigations. Now let's come to the builder. Builder is also confused. No, the complete transaction. He is asking, should I avail the benefit of notification number 11/2017, para 2. That is, para 2 says 11/2017 is the notification for services. Para 2 says for construction you can reduce 1/3 value. That is what the para says. Can I avail that for the valuation purpose? So the AR is saying, yes, you can avail it. You reduce that, provided there is a transfer of land. If the building, if you are selling it to the third party, if it includes transfer of ownership of land, you avail the benefit of notification 11/2017, para number 2. Otherwise, it will be 18%. Joint development agreement is a complicated one. I made it very simple for you. Don't think that this problem is over. At least you would have got the macro view of how this transaction will be done. 2 things: refer notification 4/2018. 2, refer AR ruling which has recently come. Party name is Peter. It is in a Mangalore actually. Both of them are from Mangalore. The history is like this. You know, why he specifically applied for AR ruling is, his question was, after the construction is being done, I am going to gift those flats to my relatives. Should I pay GST? AR said, you do whatever you want after getting the flats. It is taxable. Okay, so refer 4/2018. Also refer these two AR ruling. Will give you complete understanding on JDA. But still there are a lot of things which are not answered. Now I will tell you one more aspect. I will add one more point, sir. In JDA agreement, what happens is, you will also get rent compensation, right? Rent compensation for 2 years. It will take consideration. Construction will take 2 years. Lunch is ready? Huh? Okay, you should have informed. You know, they're waiting for it actually. JD and all, we'll see it later, sir. First you give me the food. So you will get rent from the party builder as a compensation. That is also taxable. So you should be very, very careful. JD agreement, there are a lot of things which you have to consider. For money consideration, time of supply is whenever you receive the money. But if you don't receive the money, if you are receiving only the flats in kind, then time of supply shall be at the time of allotment. Any other question? Yeah, sir, please. Sorry? Yeah, okay. I will quickly finish it off. Then we will break for lunch.
1/2018 says once the completion certificate is CO completion certificate is obtained.
Yeah, correct. See, assuming that you are obtaining the completion certificate and transferring the land and building.
Land not transferred or not taken in advance, GST not applicable. Is it still holds good or when changed?
Sir, that clearly says, if the transfer happens after obtaining the completion certificate, this will fall into schedule, which is a non-taxable supply. The moment it becomes a non-taxable supply, you have to reverse the ITC. Why? Because section 247 says exempt supply. Beautiful definition. Exempt supply includes supply at nil rated supply. Also the wholly exempted by way of section 11 or 5 of the CGST Act and IGST as the case may be, and includes non-taxable supply. So nil rated also included in exempted, exempted also included in exempted, third is non-taxable also. That's why you can see a lot of builders who are advertising no GST, flat no GST. What is this? It's actually there, no GST will not be charged. But previously it was, say for example, flat is 50 lakhs. They were available, they are eligible for input tax credit. Now, ITC is not there, it is a cost. So they will add it along with it, they will make it as 55 lakhs.
Same thing applicable for landowner also, because he's also getting the constructed land and building.
Yeah.
For transferring of his developmental right.
Yeah.
The consideration comes in the form of constructed land and building.
Yeah, correct.
So he don't have to pay any tax.
He has to pay, sir. He has to pay on that. First there are two transactions to it. One is I'm transferring my land. That's a development right. Second thing is he is constructing and then he is giving me a service, construction service. That 4/2018, if you see, first para is for landowner. Second para is for the builder only. It is issued under 148, so you can go through it. Can we break? Yeah.
Composition is applicable.
No, composition is not applicable because it's a service, sir. Because it's a service. It's a service. Because what happens is, any service other than restaurant service, you are not eligible for composition. Okay, clear? I think everybody's stomach is burning, so let me just stop. Any other questions I can take during the lunch break? Thank you so much. Thank you so much for being with me. Thank you.
Thanks a lot, sir, for your extensive session. Now may I call upon Mr. Dinesh on the stage to present a small gift as a symbol of love and appreciation on behalf of SA.
Good afternoon to all. I just wanted to give a brief profile and introduction of Mr. R. Subramaniam, Chartered Accountant, who is with us. Mr. Subramaniam is a qualified Chartered Accountant and Cost Accountant with having 20 years plus of in-depth professional experience in direct and indirect taxes, and is a founder partner of Subramaniam and Associates, a reputed firm headquartered at Chennai. His area of specialization includes income tax and GST, besides the recently repealed registrations of service tax, also central excise, central sales tax and state value-added tax. So he has delivered presentations in over 100 orientation seminars on GST, even before the notification of GST in July 2017, and continues to address seminars or meetings on GST post its introduction. He also has the unique distinction having trained government and private sector employees on the nuances of GST, and also appears before the direct and indirect tax authorities, including CIT appeals, IT, SESTAT and VAT tribunals. So he also trains the GST officials of state and central government. With this brief introduction, may I call upon Mr. Subramaniam to take the stage. Thank you.
Good afternoon. At the outset, I am thankful for the SIRC for giving me an opportunity to share my views particularly related to registration and accounts and records. I know that this is a post-lunch session. I know your difficulties. Those who wanted to sleep, you please do it. I will not disturb your sleep. உங்களுக்கு ப்ராப்ளமே கிடையாது, ஏன்னா நீங்கள் கேட்குற மாதிரி தூங்கலாம், ஆனால் நான் பேசுகிற மாதிரி தூங்க முடியாது. ஸோ மை டிஃபிகல்ட்டிஸ் வில் பி மோர். எஸ் சார்.
We need a video
Ah.
so that in case you don't get sleep in the night.
Yes.
You can utilize.
Yes, sir. So therefore, with this, let us going into the topic. Before going into the topic, particularly the registration, first we know that under the GST law, the taxable event is totally different, correct? Under the earlier law, VAT law, the taxable event is the transfer of property, particularly movable property. Under the service tax regime, the taxable event is the services rendered. Under the excise law, the taxable event is, what is the taxable event under the excise law? Removal of goods, manufactures, etc. But under the GST law, the taxable event is a supply of goods or services. So there should be a supply of goods or services. But whether the supply is being defined under the GST law, yes, supply is being defined under the GST law. If you go through section 7 of the CGST Act, it says supply includes transfer, exchange, relinquishment, sale, barter, then license, lease, rental, etc. So therefore, it starts with inclusive of definitions. So therefore, can we take a stand whether the supply definition is a exhaustive one or a restrictive one? But it starts with includes. Is it a restrictive one definition or a exhaustive one definition? It is an exhaustive definition because there is a Supreme Court decision also, if my remembrance is right, 44 ITR page number 84, wherein Taj Mahal Hotel, wherein the Supreme Court had held that inclusive means it is an exhaustive one. So therefore it is an exhaustive definitions. So you go into the basic and then you go for registration, then accounts and records. So therefore supply is an inclusive definition. One. The second is it should be for a consideration. So that is very, very important. So therefore the supply should be for a consideration. If there is no consideration for the supply, then it is not liable at all. It is not liable for the GST at all. The third important limb in section 7 is it should be in the course or furtherance of a business. So therefore supply is an inclusive definition. One, it should be for a consideration and it should be in the course or furtherance of a business. Say for example, in case of an employee who is working in, is a vice president of HDFC Limited. He purchased some Audi car for 45 or 50 lakh rupees. In the month of July 2020, assuming that today is July 2020, he wanted to sell the car. He sold the car for 22 lakh rupees. Whether he is liable to pay GST or not? Is it a supply or not? Is it a supply or not? Is it a supply first? It is a supply, correct, because it is a transfer or it is a sale. Supply includes sale or transfer, therefore it is a supply, correct? The second important is it for a consideration? Yes, it is for a consideration, so therefore it is a supply. Whether it is liable to pay GST on this transaction? No. Yes or no, it is a supply?
No.
Why?
Furtherance of business.
So there is no furtherance of a business in this case. So therefore he is not liable to pay GST on this transaction. But it is a supply, correct? It is a supply, but during in the course or furtherance of a business, there is no furtherance of a business, therefore it is not liable to pay the GST. Suppose assuming that the same person is also doing some other buying and selling of a car. He is doing part-time buying and selling of a car. Then in such a situation, whether he is liable to pay GST or not?
Yes.
Yes. Why? because he is in the course or furtherance of your business. If you go through section 2 subsection 17, business is defined, it says any trade, commerce, etc. So therefore it is a supply, it is a business, therefore he is liable to pay the GST. So that is very important. So therefore the supply is an inclusive, it should be for a consideration and it should be in the course or furtherance of a business by one person. That's very, very important. So therefore, if I am selling myself, I am liable to pay GST under the law. Earlier law, what stand we took? What is a stand? It is only a stock transfer. I am selling to my own unit. Therefore, it is not subject to CST or VAT. But today under the GST law, if you are selling the goods to your own branch, if you are sending the goods to your own godown, you are liable to pay the GST provided the other unit is also registered. If it is not registered, then there won't be any issues at all. If I am having some branch in Bangalore, I am sending a goods from Chennai to Bangalore. Earlier law, it is treated as a stock transfer and it says it is not at all a sale. The reason is, for sale, there should be a seller, there should be a buyer, there should be a consideration and there should be a transfer of property. So here there is no buyer and seller, correct? I am sending my goods to my own branch. So therefore the earlier under the CST law or VAT law, we took a stand, it is only a stock transfer, so it is not liable for GST. But under the GST law, according to schedule number 1, item number 2, any transaction between two distinct or related party will be considered as a supply on which you are liable to pay the GST even though there is no consideration. So therefore, this is very, very important under section 71A. Then we will go into the 71B. 71B talks about import of services. Import of services, whether during in the course or business or not, it will be considered as a supply. So that means, if my daughter downloaded some software, whether it is a import of service or not, downloading the software, is it a import of service or not? It is a import of service. She downloaded for only for 10,000 rupees. Now the act says import of service, whether during in the course of business or not, it will be considered as a supply. So therefore, whether she is required to get it registered, one, whether she is liable to pay GST or not, yes or no? Supply is over for you, no? Yes, just I am giving you only the basics, so after that we will go for registration. Yes or no? Whether she is liable to? So therefore she is liable to get it registered and file the return and pay the tax. Yes, she is only studying only 10th standard. Correct. So, but if you go through section 71B, 71B says importation of a services, whether during in the course of business or not. Section 71A says for a business or furtherance of a business. 71B, which is absent. 71B says whether during in the course of business or not, it will be considered as a supply. So then what we have to do? Whether you have to ask her, you please file the return, pay the tax, and she is a minor, so therefore I have to file because I am the guardian of the minor. So all those things I have to give my photo and I have to sign it. All those things whether we have to do it or what we have to do. Threshold limit, good question. If we go through section 24, for import of service no threshold. Correct. I will come to that. Registration I will come to that. Correct. So therefore, according to the law, according to the act, yes, you are liable to get it registered. But if you go through the notification number 10, item number 9, IGST notification dated 28/6/2017, it says import of services is exempted for individual, government and charitable trust. So therefore, according to the law, yes, it is a supply, but only the notification is exempt you from this supply. So therefore, one, yes, you are liable to pay GST. but notification is exempt. Therefore, you are not required to get it registered under the provisions of the law. So, this is section 71B. Then we come to section 71C. 71C says activities which are all specified in schedule 1 without consideration is a supply. Activities specified in schedule 1 without a consideration is a supply. Therefore, you have to go to schedule 1. What schedule 1 says? Schedule 1, if you go through schedule 1, item number 1, it talks about permanent transfer of a business asset on which input tax credit is claimed. So, assuming that I will explain this item number 1 with some examples. TCS, a software company, purchased 1000 computer in the month of July 2017. In July 2020, they used this computer. They don't want these are all the computers. Now they wanted to sell this computer. What would be the price? The price will be 500 rupees or 1000 rupees, correct? So meanwhile, one charitable institutions approached TCS. Sir, if you give it as free, we can give it to our student. We are registered under the section 12A of the Income Tax Act, and we are a registered charitable institutions, and we are also having ATG exemptions. Therefore, you please give it to us freely so that we can give it to our students. So the TCS decided 1000 computers, even if we get only 500 or 1000 rupees per computer, instead of selling it, why don't we give it to the trust? They gave it freely to the charitable institutions. Now you tell me whether TCS is liable to pay GST or not on this transaction. No. Yes. Only 2 answers, don't worry. See, I am also learning from you. That doesn't mean that I know everything.
Without consideration.
Yes, sir?
Yes.
Liable to pay GST according to schedule 1. See, now only I explained section 71A talks about for a consideration in the course or furtherance of your business. There is no consideration at all. Then where is the question of supply? Where is, I will confuse you. Where is the question of supply? Who you are liable to pay GST? Is there any consideration, sir?
No consideration.
I gave it freely.
71C.
Go through section 71C. 71C says, these are all the, I will tell you certain activity what you will do. These are all the activity, even if you didn't receive the consideration, you pay me my GST. That is schedule 1. Schedule 1 says very clearly, even if you have not received the consideration, I am not bothered. You pay me my portion GST. The government is very clear. Therefore, the item number 1 says permanent transfer of a business asset on which input tax credit is claimed. The first question is it a permanent transfer or not? Yes. Is it a business asset? Yes. Business asset. Whether the business asset is defined under the GST law? It's a big question. Business asset is not defined under the GST law. Therefore, my view is that fixed asset, stock in trade, whatever your asset related to your business, all are your business asset. So the government, they have to clarify what is a business asset. Till date, they have not clarified. So this is only for, my view is this is only for capital items, but it is not being is defined. So therefore, all the asset you have to take into consideration. So therefore, it is a business asset. Second question. The third question is whether you have claimed input tax credit. Yes, at the time of purchase, I claimed input tax credit because it is allowable according to section 16 of the GST Act. So therefore, I am eligible to claim the credit. I claimed the credit also, no problem at all. Yes. And therefore now, is there any consideration next? No consideration at all. So therefore, even though no consideration, if there is any transfer of business asset on which input tax credit is claimed, you are liable to pay the GST. The same TCS, instead of computer, they are selling 1000 vehicles and giving to the charitable institutions. What is the stand now? Whether still they are, whether still will come under the category number 1 or not?
There was no input tax. But motor car, they wouldn't have paid any tax. I mean, they would
At the time of purchase.
No, ITC.
They would not have claimed it.
Oh. So the question is now, it is a blocked credit according to section 17 subsection 5. So therefore, on which you are not eligible to claim the credit. Therefore, no credit is taken. So it is a supply, no doubt. It is a business asset, no doubt. It is a transfer, no doubt. On which input tax credit is claimed, I didn't claim any input tax credit. Therefore, not liable to pay the GST, even though without a consideration. Correct. So this is item number 1. Schedule number.
GST on
Yes, sir.
amount and which rate?
Huh?
GST on which amount I have to pay and
It is a transaction value, that's all. For second category, you are not liable to pay GST.
zero. I'm not collecting any money.
Say the sir is asking the question. Sir, you in the first example you told that you are giving to the charitable institution, no doubt, and you gave it freely, no doubt. Now Act says even without consideration you are liable to pay GST or what value? It's a big question. Correct. Therefore you have to go through section 15. 15 says it is a transaction value. Sir, I don't know what is a transaction value. Whatever value that you are going to adopt, that will be the transaction value. If you say I am not able to find out my transaction value, then you have to go into rule 27, 28, 29, 30, 31. It says that open market value, like kind and quality, or 110% of the cost of productions, like that will go. So therefore, you have to assign what is your transaction value on which you are liable to pay the GST. So therefore, item number 2 is over. Sorry, schedule number 1, item number 1 is over. Item number 2 talks about transaction between a two distinct person or a related person without a consideration, you are liable to pay the GST. So distinct person is being defined under section 25 subsection 4. What is a distinct person? Distinct person means a person who has more registration number. I am in Chennai. I have one registration in Tamil Nadu, another one registration in Coimbatore. These two person is a distinct person. No doubt, one PAN, one entity, all I agree. But according to the GST law, you are a two different entity. You are a two distinct person. Therefore, any transaction between a two distinct person on which you are liable to pay the GST. That is why if I am sending my goods to my own branch, but having a different GST number, yes, I am liable to pay the GST on the stock transfer. Then the question is, sir, what is the value? The value is open market value or like kind and quality or 110% of the cost of production, etc., which we have to say. You have to go one by one. Don't go at the end. First you have to exhaust one by one and then you have to come to what would be your value for the purpose of discharging your liability. Therefore, any transaction between a related person even without considerations. Assuming that Subramanian Associate is a partnership firm having 4 or 5 partners. This firm is filing or Subramanian Chartered Accountant IT return. Now, is it a related party? Yes, sir. Correct? Is it a related party? Yes. Subramanian Associate filed or Subramanian IT return freely. But the Act says, no, you are a related person. No doubt there is no consideration, but you are liable to pay the GST. Now, what would be the value? What is the value that I am going to charge my customer? The same value I have to adopt here and I have to discharge a liability. Therefore, 31/3/2008 la enga office la na paathukiren return anta. So edukku indha confusion la vendam. So I will file my return. So Subramanian Associate is not required to file my return. So therefore, you must be very, very careful. This is item number 2. Then item number 3, schedule 1, item number 3, the transaction between a principal and agent principal. If the goods is moved from principal to agent or agent to principal, earlier law, it will not be treated as a sale, but under the GST law, it will be treated as a supply, on which you are liable to pay the GST. Then fourth, very, very important is importation of a services from the establishment or from a related person during in the course or furtherance of a business. That is very, very important. If you import any services, from your related concern or from your establishment outside India, on which you are liable to pay under reverse charge mechanism. So therefore, these are all the 4 items without consideration. Sir, my company is in Singapore, I am here, my subsidiary company is in Singapore, I am a parent company, they are giving me free access of server and they are allowed me to use my trademark, etc. I am using it. There is no consideration at all, sir. There is a problem. Even in such a sense, in one director report, That they have thanked the subsidiary company, you have given, these are all the services freely to us. Very, very helpful to us. That's all. It is not helpful to the GST. GST Act says, no, you have availed, these are all the, yes, I availed. These are all the services you availed from related person. Yes, I availed from a related person. Therefore, you are liable to pay under GST, under reverse charge mechanism. No doubt, you can take the credit, input tax credit. So, therefore, this is a very, very important. This is section 7.1. So, after that, there are certain services which are all specified in Schedule 2. What is supply of goods, what is supply of services. Therefore, to treat is it a supply of goods or supply of services, you have to go through Schedule 2. Schedule 2 says, these are all the goods will be considered as a supply of goods. These are all the transaction will be considered as a supply of services. So I think with this, we have know that the background of what is a supply, what is a taxable event. With this, we will go for the first is a registration. So before going into the registrations, the Act defines what is an aggregate turnover. If you go through section 2, subsection 6 of the GST Act, it says what is aggregate turnover. Aggregate turnover means a taxable supply of goods or services plus exempted goods plus export plus interstate taxable supply of goods or services. So all are fine. Okay, sir, very good. So taxable aggregate turnover means taxable plus exempted plus interstate plus export plus zero rated, etc. No problem at all. But if you go through the exempted definitions, the exempted definition says the exempted goods or services means goods which are all exempted under section 11 of the CGST Act or under section 6 of the IGST Act or by notification. And it also says nil rated and non-GST supply is also a exempted supply. That is a problem now. See, the Act says very clearly for if you go through section 22, 22 says very clearly if your aggregate turnover exceeds 20 lakh rupees, then only you are liable to get registered under the provisions of the law. All are very happy. Sir, aggregate turnover 20 lakh under the service tax law, it is only 10 lakh, under the VAT law, it is only 10 lakh rupees. But here, the 20 lakh rupees, we are all happy. But the problem is, the language used in section 22 is aggregate turnover exceeds 20 lakh rupees. So, one example I will tell you. Clinical establishments are providing a health care services by a doctor. Is it exempt or taxable? Yes, sir? Taxable. Exempt. So, it is exempted. If you go through the notification number 12/2017, item number 74, if my remembrance is correct. It says it is exempted by wide notification number 12/2017. 12/2017 is an exempted notification. No problem at all. So therefore, this doctor is providing only the health care services. Is totally is exempted. He is not required to get it registered. No problem at all. But this doctor is also letting out one commercial property for rupees 6 lakhs. Now, what is his aggregate turnover? The aggregate turnover is exempted plus taxable. Exempted is 80 lakhs, taxable is 6 lakhs, more than 20 lakhs. Whether you are liable to register? Yes. Whether you are liable to pay GST or not? Yes. No. Your taxable turnover is only less than 20 lakh rupees, correct? There he is liable to pay the GST because his aggregate turnover is more than 20 lakh rupees. The Act says once your aggregate turnover is more than 20 lakh rupees, you are required to get it registered. Once you are registered, you are required to follow all the provisions relating to filing of return and payment of tax. So therefore, you are liable to pay tax on 6 lakh rupees, and in each and every monthly return, you have to show that my exempted turnover is this, my taxable turnover is this, and you are liable to pay the GST. So therefore, section 22 uses the words aggregate turnover exceeds 20 lakh rupees. Therefore, the aggregate turnover is very, very important. Next is in case of a petrol bunk. A petrol bunk, the turnover is 1 crore. Whether it is liable to pay GST on sale of petrol and diesel? Why? Huh? It is exempted. It is exempted.
Out of scope of GST.
Is it a non-GST supply or GST supply? It is a non-GST supply, correct. So therefore, my non-GST supply is 1 crore. I am also selling some lubricant oil for 5 lakh rupees. Now you tell me what is my aggregate turnover. If you go through aggregate turnover includes taxable plus exempted. Exempted, if you go through exempted, it says nil and non-GST is also exempted. Therefore, this will be included. Therefore, for the purpose of aggregate calculations, the entire turnover will be included. Therefore, the petrol bunk is liable to register and liable to pay the GST. Correct. So that is very, very important. So therefore, if the aggregate turnover exceeds 20 lakh rupees, you are liable to pay the GST. The next question is, sir, I am having in Kumbhakonam, spoke in SIRC branch in Kumbhakonam. One person, asked me the question, sir, my professional receipt is only 7 lakh rupees. My agricultural income is 20 lakh rupees. What I have to do? Is it agricultural income is taxable or exempted or non-GST supply? Therefore, it is an exempted supply. Therefore, it will be considered as for the purpose of aggregate turnover. Therefore, I told him, sir, either you sell the land or that's all. He has to pay the tax on the 3 lakh rupees professional, 3 or 5 lakh rupees professional charges. He is liable to pay the GST. The next is a dividend received from the company. I am receiving the dividend from the company. Is it a taxable supply or exempted supply or non-GST supply or not a supply at all? Or sale of shares, say non-GST supply or supply. So these are all the things that we have to verify before advise the clients whether he is required registrations or not. That's very, very important. So one doctor, he called me. So my daughter or friend or father called me, sir, I am a doctor, whether I am liable to pay GST or not. I told him, you are a doctor, sir, only clinical health establishments, these are all already specified in notification number 12/2070. You are not required to pay the GST. You are also not required to get it registered under the provisions of the law. I was happy working. Within 1 week, again he called me. No, sir. My employer says you have to get it registered. I told him, I will give in writing you are not required to get it registered. You tell him that you are providing these services. He told where you are working. Sir, I am working in Tata Memorial. Okay, no problem. Sir, you are not required to it. Then after 1 week, he called me, no, sir. If you are not registered it, we will not pay you. That is a stand of the employer to what I have to do. Then I got out. So something is serious. Then I asked him what you are doing. And he told me I am doing some research work, sir. So the healthcare establishment only is exempted, not research. So therefore the employer is correct. The person is correct. So therefore I told him, no sir, you are liable to pay GST, you are liable to get it registered. And he told me, illa sir, 3 vaati neenga dhaan illa neenga. Sir, neenga 3 vaati neenga vandu healthcare neenga. Ipo question kekavum na ipo enna solringa adutha next, no sir, I am doing research indringa. So research abdingrappa no doubt you are liable to pay the GST. This exemption is only for treating the patient, healthcare establishment mattum. Other than that, if you are doing some other services, you may be a doctor, but doing some other services, you are liable to pay the GST. That's very, very important. So therefore, the Act says the aggregate turnover exceeds rupees 20 lakh rupees, and also says in certain cases, northeastern area, it says that the aggregate turnover is 10 lakh rupees. Now my question is that in Assam, the aggregate turnover is, limit is 10 lakh rupees. I have 2 units, one in Tamil Nadu, another one in Assam. In Assam, my turnover is 11 lakh rupees. In Tamil Nadu, my turnover is 9 lakh rupees. Now you tell me whether I am liable to get it registered in Tamil Nadu or whether I am liable to register in Assam.
Both.
That's very important. Here, in Assam, my aggregate turnover is 10 lakh rupees, that exceeded. Correct. So therefore, I registered in Assam. Therefore, since my aggregate turnover is exceeds, I am also liable to get it registered under the under all other states. That's very important. So therefore, aggregate turnover we have discussed. Turnover on which tax to be paid under reverse charge basis. That's very important. I am liable to pay only under the reverse charge basis. I am an advocate. A person who is availing my services, he is liable to pay the GST. I am not liable to pay the GST because it is specified in the notification. I am a GTA, Good Transport Agencies. A person who is availing my services, he is liable to pay the tax, but my turnover exceeds 20 lakh rupees. What I have to do, whether I have to get it registered or not. You are not required to get it registered because the aggregate turnover itself says a person who is liable to pay under reverse charge mechanism is not required to be included for the purpose of the aggregate turnover. So therefore, that is not required to be included. So these are all over transfer, business, transferees, not required. This we have discussed, Assam. We have discussed. Section 23 next. So section 22 talks about a person whose aggregate turnover exceeds 20 lakh rupees. But section 23 says a person who is exclusively engaged in exempted supply of goods or services, he is not required to get it registered. So therefore, I am dealing only in exempted goods. I am dealing only in exempted services. Then in such situations, you are not required to get it registered. Here very, very important is exclusively. So therefore, I am dealing only in exempted goods. I am dealing exempted goods and also 2% I am also doing some taxable goods, then this section is not applicable. This section is not applicable, then you have to go to section 22. 22 says aggregate turnover exceeds rupees 20 lakh rupees. So therefore, now here the question is, I am a dealer, I am dealing only in exempted goods, but I am also liable to pay tax under reverse charge basis. I paid certain amount to the advocate, I also paid certain amount to the GTA, I am liable to pay under reverse charge mechanism. In such situations, whether I am liable to get it registered or can I take a stand, this is, I am dealing only in exclusively exempted goods or supply of services, therefore not required to get it registered. Which stand will be useful? Which will be correct?
Only registered person is liable to pay the RCM. So, in the first instance, he is not required to register.
Very good, sir. Only the registered person is liable to pay reverse charge basis. So therefore, this person is not at all is registered. So therefore, he is not liable to pay the reverse charge. Any other view?
But still the person is taxable person. So I think he has to get it himself.
He has to be registered. Yes.
For paying RCM, the limit is not.
Is there any limit? No limit at all. Except for receiving from unregistered supply of goods or services 5,000 rupees. That also postponed up to 30th September 2019. So for this you have to go through section 24. Section 24 says, notwithstanding anything contained in section 22 and 23, 22 talks about the aggregate turnover, 23 talks about a person who is exclusively engaged in exempted goods supply of goods or services. Notwithstanding anything contained in section 22 or 23, the following person, they are required to get it registered irrespective of the turnover. 1. A non-resident person. 2nd, casual taxable person. 3rd, a person who is required to collect tax at source under section 52. A person who is required to deduct tax under section 51. A person who is liable to pay tax under reverse charge under section 93. A person who is liable to pay reverse charge under section 94. Therefore, it says, irrespective of the turnover, the following person, a person who is liable to pay under reverse charge mechanism, he is also liable to register. Therefore, section 24 says very clearly, irrespective of the turnover, if you are liable under reverse charge, yes, you are liable to get it registered under the provisions of the Act. Therefore, it starts with notwithstanding anything contained in section 22 and 23. So, therefore, Sir, even though he is not registered, no doubt, even though he is engaged only in exclusive of exempted supply of goods or services, but according to section 24, he is liable to get it registered.
So in that case,
Once he registered, yes sir.
even individuals will get caught in this provision. No?
How individuals?
Suppose if I buy some goods from this provision store, which is
Hmm.
not registered in city, in that case, without regardless of turnover and other, I will have to register myself.
Sir, that is, say, that is covered by section 9.4. 9.4 says, a person who is registered and getting the goods or supply of services from the unregistered person, then only a registered person is liable. You are not registered. Correct. You are a consumer, you are not registered. That is a question of reverse charge for you.
Section 23 exempts some category of persons from registration. So they are not registered.
No. It should come in the category. One is a casual taxable person, non-resident taxable person, a person who is liable to pay under section 9.3, 9.4, electronic commerce operator, section 51, section 52. It is not there. Individual is not there.
No, this section 23, I am dealing only with the exempted.
Correct, sir. I got the point. Say, sorry, he is telling, I am an individual. I am dealing only in exempted supply of goods or services.
So I mean that.
But I am also paying some GTA, some legal fees. Whether I am liable to get it registered, I am only an individual.
Which proceeds? Registration or this?
The question is, you are liable, sir. You have to register and you are liable to pay the tax, even though you are an individual. Because if you go through the person definition is very clear. It says person includes individual also. Correct. So therefore, I am an individual, no doubt. I am dealing only in exempted goods, supply of goods or services, no doubt. But I am also making certain payments which are liable under reverse charge mechanism. Yes, you are liable to get it registered under the provisions of the law. No exemption for individuals. But individual person definition, it includes individual also. So therefore, you are liable to pay. You are liable to get it registered.
So any effects of
Yes, sir.
any effect because 9.4 is temporarily.
See, 9.4 is, once 9.4 comes, what will happen? See, 9.4 is very clear. Doesn't target on unregistered person. It target on a registered person who is getting the goods, services from unregistered person. He is liable to pay and he can take the credit. Correct. And there is a one amendment, just 2 or 3 months back, this, reverse charge mechanism is not applicable to all the persons. The 9.4 is amended. It says that only the class of person as notified, the notification is not yet come. So it will come only in the month of September 2019. So which we have to wait and see. So therefore, even if you are availing the services or purchasing the goods from unregistered dealer, then only 9.4 will be attracted. Otherwise, you have to examine whether 9.3 will be attracted. 9.3 will be attracted even if a person is a registered person, correct? GTA is registered. The advocate is also registered. Whether advocate is required to get it registered or not? Yes or no?
No, sir.
No. Why?
Because either he supplies exempt goods or he supplies goods which are taxed under RCM.
RCM. So assuming that an advocate income is 25 lakh rupees and he also let it out some property for 7 lakh rupees. What will happen now? So he will be get registered. Now I am availing the services from that advocate. Now what will happen? He registered, but I am paying a legal fee to that advocate. No doubt he registered under the GST law, but who is liable to pay GST? Whether I am liable to pay or he is liable to pay, I am liable to pay even though the other person is registered. So therefore 9.3 talks about even if you receive a services from the registered person, if the activity mentioned in the notification number 13/2017 or services mentioned in 13/2017, sponsorship services, GTA services, director sitting fee services, legal fee services, these are all the services on which the recipient is liable to pay the GST. So therefore, that's very important.
So RCM is not applicable on GTA of the transport of
Say, if the goods itself is exempted, and I am dealing only in exempted goods which are also specified in the relevant notification, these are all the goods GTA is not required to. No, the goods itself is exempted, then I got the point. So, say the GTA is, there are certain goods, the GTA is not, the GTA services itself is exempted. Milk product, vegetable products, these are all the product which is totally is exempted, then you are not liable to pay the GST. Yeah, sorry, you are not liable to pay tax under reverse charge basis. Yes, sir? No, even if we deal in exempted taxable goods also, he is not required to get it registered. You have to examine whether there is any aggregate turnover, is there any taxable goods or supply of goods by a GTA. Then in such a situation, he is required to get it registered. No problem, sir. Not required. Yes, sir. Yes, sir. Wholly exempted from tax. So this we have discussed, section 23 we have discussed. So these are all the notification number 5/2017. So this notification talks about only the person who engage in making a supply of taxable goods or services which is liable to be paid on reverse charge basis by the recipient. I am engaged only the services on which the other person is liable to pay the tax. That in such situations, even though the turnover is exceeds, you are not required to get it registered. The next important is the casual taxable person having an aggregate turnover not exceeding amount rupees 20 lakh rupees, but he also makes some interstate taxable supply of handicraft goods. In such a situation, he is not required to get it registered. The reason is, if you go through section 24 says interstate supply is also required to be get it registered irrespective of the turnover. So that means section 24 says casual taxable person etc. A person who makes an interstate taxable supply, he is also required to get it registered irrespective of the turnover. But by aggregate turnover all over India basis less than 20 lakh rupees, I am also dealing in handicraft goods, then in such situations, even though you are doing some interstate taxable supply, you are not required to get it registered because of these notifications. Otherwise, yes. The person making an interstate supply of taxable services and having an aggregate turnover, this is for all. Sir, my turnover is less than 20 lakh rupees, but I made only one interstate taxable supply of services to Pondicherry. Now, the aggregate turnover is less than 20 lakhs, assuming that my turnover is only 15 lakh rupees. I made 10,000 rupees interstate taxable supply of services, 10,000 rupees. Now my aggregate turnover is 15 lakh 10,000 rupees, correct? According to section 22 says your turnover is less than 20 lakh rupees, therefore you are not required to get it registered. But if you go through section 24 says irrespective of your turnover, the following person interstate supply of taxable supply of goods or services. So here the interstate taxable supply is only 10,000 rupees, correct? But since it is mentioned in section 24, so therefore you are liable to get it registered. So this is even for chartered accountant it will be a problem. So your turnover may be less than 20 lakh rupees if you make only one interstate supply. The act says according to section 24 you are liable to get it registered. Once you registered, you are liable to pay tax on the entire amount. So to avoid that, this, yes sir. Taxable? Only for services. Only for services. Services only. Yes sir? Interstate? I didn't get you, sir.
Interstate sale of service.
Interstate sale of service.
Supply of service.
No, that's why I am telling you.
But exemption is there.
No, sir, you didn't get my point.
Goods. Only for goods.
Sir, my aggregate turnover less than 20 lakh rupees, no problem. According to section 22, I am not liable to get it registered. No problem at all. But section 24 says, if there is any interstate supply of services, interstate supply, if there is any interstate supply, irrespective of the turnover, you are liable to get it registered. This is section 24. Now the officer says, no doubt, your turnover is not exceeded 20 lakh rupees. According to section 22, you are not liable to get it registered. But see section 24. 24 says, if there is any interstate supply, you are liable to get it registered irrespective of the turnover. So therefore, you are liable to get it registered. Once you are liable to get it registered, once you registered, then you are liable to pay the tax even though your aggregate turnover is less than 20 lakh rupees. So to avoid this notification came, this is being represented a number of times to the government also. The person making a supply of services other than the supply specified in section 9.5. So that means e-commerce operators. Through an electronic commerce operators, I am supplying the goods only through the electronic commerce operator. The section says, 24 says you are liable to get it registered. This notification says, I will exempt you, provided if your turnover is less than 20 lakh rupees. Aggregate turnover is less than 20 lakh rupees. Job worker. The problem is for the job worker is, the job worker turnover, like chartered accountant, the job worker turnover may be less than 20 lakh rupees. But if there is only one interstate supply, section 24 says you are liable to get it registered. So to avoid that, this notification came. This is being represented by the Trupur Job Worker Association also. So now section 24, this we have discussed. What is section 24? Compulsory registration. See here, one is a interstate taxable supply. So if there is any interstate taxable supply, section 22 is not applicable. 24 is applicable, therefore you are liable to get it registered, irrespective of the limit. Then second is a casual taxable person. The third is a person required to pay tax under reverse charge, 9.3 and 9.4. Required to pay tax under section 9.5. E-commerce operator, supplying the goods through e-commerce operator. NRI, non-resident taxable person. Required to deduct tax at source under section 51. Making a taxable supply as an agent, input service distributor, electronic commerce operator, supply of OIDR, other supplies specified under subsection 9.5. So these are all the category of person, irrespective of the turnover, they are liable to get it registered. So to avoid this, there are 3 or 4 notification government is issued based upon the representations. So the procedure for registration, you know that practically we are dealing with the registration. We will go into some issues. Registration of a business vertical, that is very important. I have 2 or 3 business within the state. Whether I have to obtain only one registration or can I have a chance to get 3 more registrations. The Act says if the business is totally different, at the option of the dealer, if you want, yes, you can have 2 or 3 registration. If you don't want to have, then include all the places as your additional place of business. That is very, very important. You have to include all the places, additional place of business, and then you can file your return and pay the tax. But if you have 2 or more registration within the state, and if there is any supply between the 2 registration number, then in such situations you are liable to pay the GST. Grant of registration to person required to deduct tax at source or collect at source. So this is being specified in section 51. Section 51 says that if the contract value is more than 2.5 lakh rupees, if the contract value is more than 2.5 lakh rupees, and the payer is a government, central or state government, or a public agencies, or a public sector undertaking, they are required to deduct tax at the rate of 1%. So therefore, a person who is availing the goods or services, and if the contract value is more than 2.5 lakh rupees, then in such situations, the recipient, being the central government or state government or the public sector undertaking, they are liable to deduct tax at the rate of 1%. Further, there is one form number 7A. This is like our income tax form. You have to file with the form 7, and then you have to give the certificate like form 16 in form 7A to the recipient. Then only the other person can claim the credit. So whatever the tax is paid as a TDS, it will automatically credited to the electronic cash ledger of the recipient. Registration of a non-resident person, that is your one form 9, you have to file it before 90 days. Rule 14 to 17 is not required. Deemed registrations. Sometimes what will happen, if the person is not registered within the department and if there is any inspection by the department or by the officers, then in such a situation, if the aggregate turnover is more than 20 lakh rupees, the officer himself will allow the registration. It is called suo motu registrations. And then he will proceed. Casual taxable person who has no business establishment in other state, he has to register as a casual taxable person and he has to file the return and pay the tax in the respective state. Say for example, exhibition sales. These are all the sale is covered under the casual taxable person. You have to get it registered and pay the tax and file the return in the respective state. Registration provision, non-resident taxable persons, similar. Amendment in section 28. So you can amend your registration certificate. This is very important, cancellation of the registrations. Cancellation, now the department in Tamil Nadu they are sending the notice. If you have not filed your return for more than 6 months, according to section 29, the office is sending the notice to cancel your registration. And if you are a composition tax dealer, then 3 consecutive period, if you have not filed the return, they are sending you the cancellations. So, if the return is not filed as stipulated in section 29, or if the person is contrary to the provisions of the act, then the officer he has the power to cancel the registration. But before cancelling the registrations, it is the duty of the officer to give opportunity to the assessee to explain why his registration number should not be cancelled. So therefore, once you receive this, you have to explain, you have to file your return, and then you have to explain why you have not filed the return. And if the officer is satisfied, no problem at all. So otherwise, the officer will cancel your registration number. Yes, sir.
So, in October month, up to till the cancellation of the registration, I have to file the return?
Yeah, good question. Practical question.
Yeah,
Aprom,
I have
2 years கழிச்சு officer file பண்ண சொன்னார்னு வச்சுங்களேன். After 2 years if the officer asks you to file the return, you are liable to pay the late fee also and the interest also if there is any tax. So better you pay it, better you file it.
But I have received the order in email today.
Today,
That cancellation order.
oh,
Till now,
with the effect from, what is the date? The cancellation,
cancellation is in November.
ah,
But today I received the
okay. In the cancellation with the effect from date will be there, no? What is the date of effect?
no, up to October I have filed.
Right, you have filed.
Also November month I have to file December 20th. No.
Correct.
But November month I already have received the. I have to file November month or not?
Ah. So, if the registration is over, if the registration is cancelled, then there is no requirement. Even you can't upload the data. It will be very difficult to file it. Correct, sir.
Payment of tax is accepted.
Ah?
Payment of tax is accepted.
Payment of tax?
It's accepting.
Accepting. Okay.
So if I file nil return for 6 months or something, like
Ah.
cancel.
It will not be cancelled, sir. The Act says if you have not filed the return. Correct. The Act doesn't say you have to pay the tax or you have to disclose some turnover. So cancellation of registration section 29, reason for cancellations. Sometimes what will happen if the assessing officer informed your registration will be cancelled, then immediately file a return and response to the assessing officer says that I filed the return, all this is to be done only through online, and then there is one form REG 20, that form you fill it up and there is one specific column, revocation of cancellation. You apply for that. Then in such a situations, we tried 2 or 3, we got the registration. So you have to give this data to the officer. If the officer is satisfied, then he will allow you to further file. He will not cancel the registration number. He will revoke your cancellation. Revocation of cancellation, this we discussed. These are all the forms, which is not all the forms. So, and then the next topic is very important, is accounts and records. That also we will discuss. Relevant section is 35 and 36. Relevant rule is 56, 57 and 58. Here the important is section 35(1). Every registered person shall keep and maintain his principal place of business the following details. One is the production or manufacture of goods. Second, inward and outward supply of goods. Stock of goods. Input tax credit availed and output tax payable, and such other particulars as may be specified. So here very important is every registered person. So therefore in Tamil Nadu I have 3 registration number. Each and every, the registration number is a registered person. So therefore in each and every place you are required to maintain these details. Provided that where more than one place of business is specified in the certificate. I have 3 branches, but not 3 different GST number. Only one GST number, but I have 3 different additional place of business. Then in such a situation also, you are required to maintain the details in the respective place of business. Provided further that the registered person may keep and maintain such accounts and other records in an electronic format. So you are also allowed to maintain the books of accounts under electronic format. This is very important, 35(2). Every owner, doesn't talks about every registered person, talks about every owner or a operator of warehouse or godown or any other place used for storage of goods. Used for storage of goods, and every transporter, very important. Irrespective of whether he is registered person or not, whether GTA is registered or not, shall maintain the records of the consignor and consignee details. So therefore, officer is very easy. Nara GTA to poi, what is, who is a consignor, who is a consignee, now all the data will come. The transporter is not required to be a registered person. The owner is also not required to be a registered person. But they are required to maintain these details. What is who is a consignor, consignor address, consignee address, nature of goods, what is the amount, value, everything. So that will be easy for the officer to go and collect from the transporter or from the warehouse owner, so that he can complete the assessment very easily. So this is second. The third is the commission may notify, that's simple. He is also not required. Every registered person whose turnover during the financial year exceeds shall get the account is audited by a chartered accountant or by a cost accountant. This is nothing but GST audit. Form 9C. Section 35(5) says if the aggregate turnover exceeds 2 crores, but if you go through Rule 80 sub Rule 3, Section 35(5) says the turnover exceeds 2 crores. If you go through Rule 80 sub Rule 3, it says aggregate turnover. So therefore, we have to get the clarifications from the government, but our institute view is that once the aggregate turnover exceeds 2 crores, you are liable to get the account is audited under the GST law. Assuming that my turnover in Tamil Nadu is 1.80 crores and in Pondicherry is 30 lakhs. Each state my turnover is less than 2 crores. But my aggregate turnover is more than 2 crores. Therefore, in each place I am liable to get the account is audited under the GST law. That is a position as on today. So this is being also represented to the government. You have to write it. Subject to the provision of class H, that is, it talks about the blocked credit. Whether a registered person files to account the goods or services or both. If the registered person files to account the goods or services or both in accordance with the provision, that means section 1. The proper officer shall determine the amount of tax payable on the goods or services or both that are not accounted for as if such a goods are sold by the person. So my godown is not registered, but I am storing the goods. If the officer found, he will come and he will say that these are all the goods not accounted, therefore I will assuming these are all the sale on which you are liable to pay the GST. So therefore all your additional place is required to be incorporated in your principal or main certificate as additional place of business. Otherwise, there will be a risk. Every registered person who is required to get the account is audited electronically annual return. So this section 44 talks about the annual return. This is form 9. You have to file it before 31st December. Correct. So this form 9, every registered person, for form 9C, section 35(5) says aggregate turnover exceeds 2 crores. Then only you have to conduct an GST audit. But this form, annual return form 9, no turnover at all. Even if your turnover is nil, you are liable to file form 9. You are liable to file form 9, no limit at all for form 9. Whereas limit is there for form 9C. Yes, sir.
Regarding this form 9C,
Ah.
getting aggregate turnover in a year exceeds 2 crores. No, for the aggregate turnover
Yes, sir.
exceeds 2 crores,
Ah.
you have to get audited. No, for this first year,
Yes, very good question, sir. First year, whether my aggregate turnover from July to March 2018 or from April to March 2018. That is your question, correct? So my view is that you have to take from July 2017 to March 2018. And if the aggregate turnover is more than 2 crores, then only you are subject to GST audit. But our institute guideline says that even you have to take it for the purpose of calculating the 2 crores, you please take from April also. So therefore, my view is from July 2017 to March 2018. And if it exceeds 2 crores, then only you are liable to pay, liable to get the account is audited. In April, May, June turnover, if it is more than 1 crore, under the VAT law, April, May, June 2017, if the turnover is more than 1 crore, you are required to file VAT audit form WW. So therefore, this form 9, you have to file it. Form 9 is irrespective of the turnover. Form 9 is nothing but a summation of what is the return you have filed. What is the return you have filed? You have filed 2 returns, correct? GSTR 3B and GSTR 1. Form 9 is nothing but the summation of GSTR 3B and GSTR 1. The problem is, earlier what we will do the reconciliation with our books of accounts and bank book, correct? Earlier we will do the reconciliation with our books of accounts with the vendor books. Now you are doing a reconciliation of your own books. You only filed your GSTR 3B, you only filed your GSTR 1, but both GSTR 3B and GSTR 1 will not tally. You only filed it. In some situations, what will happen? My GSTR 3B will not tally with the GSTR 1, but tally with my books of accounts. My GSTR 1 will not tally with my GSTR 3B, but tally with my books. Luckily, sometime what will happen? My GSTR 3B and GSTR 1 will tally, but both will not tally with my books. So that is why reconciliation statement of 9C la ponuntaanga perusa. Periya reconciliation irukku. Oru reconciliation ah ponnum. In gross turnover reconciliation, taxable turnover reconciliation, input tax credit reconciliation, all reconciliation we have to do. And then one person he asked me, sir, from July 2017 to till date I didn't file my return, but I have turnover 2 crores more. What I have to do, sir? Whether I am liable to get the account is audited under GST law? Big question. I told him, you are not filed for. You are contravened the act for the past 1 year. Why you bother about this? You also contravene this. That's all. Then the officer will come and let him collect interest and penalty. So therefore, those type of person, one advantage you can file all in one. Take 3B, take GSTR1, take 9, 9C. Put all the turnover here so that there won't be any reconciliation at all in those type of cases. Correct. So therefore, Form 9 is nothing but a summation of all your return that you have filed. Whatever the return, GSTR, 3B and yes sir.
For 9, what happens to the first 3 months turnover?
See, 9 is very clear. The supply made under this act. So it also starts from only from July 2017 to March 2018. No doubt. So therefore, the Form 9, you are not required to do any investigation work at all. Sir, I filed GSTR 3B wrong. What I have to do in GSTR 9? Copy the same wrong in also GSTR 9. That's all. Sir, I did lot of mistake in GSTR 3B, but I rectified in April, May, June. What I have to do? Whatever mistake you committed in GSTR 3B, you commit same mistake in GSTR 9 also. That's all. So whatever you have committed from April 2018 to September 2018, there is a separate column in form number 9, column number 10, 11, 12, 13. There you have to fill it up. These Form 9, they will compare with your Form 9C. Be with it. And then it will be compared with your books of accounts. And then you have to reconcile what is there in the return, say what is there in your 9C, what is there in your books of accounts. One person called me, sir, GST is very, very good. Why? I am getting lot of credit. What is this, sir? I am not able to understand. No, sir. In 2A, I am getting lot of credits. Those credit is not belongs to me. But I am getting this credit. It is there in 2A and therefore I am taking. I told him, sir, this is wrong. No, sir. It is there in GST or 2A. Those, whatever the credit which is not belongs to you, don't take it. The next day he will change it. It is like Form 26 AS. Today there will be a credit, tomorrow no credit at all. If it is not related to them, whether 2A can be reliable. The next question is, even in the September or October, some chartered accountant called me, sir, what I have to do? It is not there in GST or 2A. What I have to do? I told him, sir, 2A is different. In September itself, I told them 2A is different. Your book is different. But some chartered accountant, what they did, they reverse the credit. No, it is not there in GST or 2A. In December, it came in GST or 2A. What will do? So therefore, GST or 2A is not a document or is not an evidence at all. What you have to do, section 16 says very clearly, whether you have original invoice, yes, I am having original invoice. Whether you received the goods or services, yes, you have received the goods or services. Whether other person paid the tax or not, yes, other person, but he has not filed the return. Therefore, you have to ask your supplier to file the return, correct? Therefore, in the month of October, there is a tweet from the department says that 2A is not a evidence for you to claim the credit. 2A is only the facilitator. So you can verify, but don't take a call based on 2A. So 2A is only 1 lakh rupees, my book is 10 lakh rupees, can I reverse 9 lakh rupees credit? Don't do it. Not required. Because you have fulfilled all the condition in section 16, that person is not filed the return. Therefore, that you have to deal it separately. Once you reversed it, after that, can you bring back? It's very difficult. Our account is over, audit is over, everything is over. Correct. So therefore, you must be very careful. So therefore, in Form 9, don't do any investigation work. Whatever you did from July 2017 to March 2018, you incorporate, and there is a separate column from column number 10, 11, 12, 13 that talks about whatever your adjustment you did from April to September 2018. So therefore, in my Form 9, my credit is only 5 lakh rupees. In GSTR, my credit is 8 lakh rupees. What I have to do? In 2A, my credit is 8 lakhs. In my Form 9, whatever the return is I filed, it is only 5 lakh rupees. The balance is 3 lakh rupees. What I have to do? Whether it is okay or not? So you have to reconcile. So there is a possibility, there are certain credit which you are eligible, but you have not availed it. Or there are certain credit there in 2A, but it is ineligible credit. Maybe a blocked credit under section 17.5, we don't know. Correct. So therefore you have to reconcile it. Is it possible in my books is 10 lakhs, but in my return is only 7 lakhs or 5 lakhs? Is there possibility? Sorry, in my books is 10 lakh rupees. In GST or 2A 10 lakh, but in my return is 12 lakh or 13 lakhs. Is it possible? That is also you have to examine. Maybe the other person not filed the return, correct? So still it is not there in 2A. So therefore you have to examine. Even in certain such situation, what will happen? RCM will not come in 2A, sir. It will not come in 2A. Yes. It will be in the books, correct. So therefore you have to, sometimes you know what will happen, GST or 2A is 5 lakhs, my return is 5 lakhs, my book is 5 lakhs. All are very happy. Number the rendu bookum tally aachina will be happy. Sir, tally aachi sir, okay sir. There is a concern, please. So even if the difference is 0, then you have to examine whether 2A credit is correct or not. In 2A there may be a blocked credit also, correct. So therefore you have to examine. Books of accounts and other record in accordance with, you have to maintain and retain the books of accounts 72 months, that means 6 years. That's very, very important. 6 years from the due date of furnishing of annual return. Your annual return is 31st December 2018 plus 7 years. Sorry, 6 years. Now, 2018 to 31st December 2024. You have to maintain the books of accounts. So, every registered person shall keep and maintain, in addition to the particulars, true and correct account of the goods or services imported, exported, payment of tax, etc. These are all the details which you have to maintain. Other than the person paying a tax under section 10, stock in respect of the goods. Therefore, you are required to maintain the stock detail also. Therefore, you have to verify your 3CD also. In 3CD, you will say that I maintain the stock books of accounts. The same stand you have to take it in form 9C also. 3CD la stock book irukku nu solittu 9C la stock book illan solludu. 9C la stock book irukku nu solittu 3CD la illam kudu. Say you are only signing both. So 9C and 3 tax audit report, both you are signing. So therefore you must be very careful. And then opening balance, receipt, supply of goods, goods lost, destroyed, return of, disposed of by way of a gift or free sample. That is very, very important. Goods disposed of by way of a gift. If I am giving gift to my customers, the detail also is required to be maintained. The next important is, if I give the gift to my customer, whether it is a supply, first question. The second question is, can I claim the credit? Correct. So I purchased lot of gift article from the vendor and gave to all my customers. The question is whether I am eligible to claim the credit. The second is whether I am liable to pay the GST on the supply made, free supply made to my customer. So therefore the first question is it a gift to customer? Is it a gift to customer? Whether the gift is defined under the GST law. Whether the gift is defined under the GST law. You go through the definition, there is no definition for gift. So then what you have to do? You have to go into the Gift Tax Act 1958. Gift Tax Act says transfer of movable or immovable property by one person to another person without a consideration voluntarily. Correct. Voluntarily without a consideration. Giving a gift to my customer, is it a voluntary without a consideration, sir? Manasachi thottu solluga. So is it a gift then? Business promotion expenses. Is it a gift? I am giving gift to my customer. Already price enjoy ஏத்திருப்போம் கரெக்ட்டா சும்மா கொடுப்போம் நம்ம correct. So it is already included somewhere. So can you say still it is a gift? So it is not a gift. Then happy, sir, can I take a credit? Yes, you can take a credit. The problem is, again what will happen? Section 7.1c and Schedule 1, item number 1 is applicable. The officer will say, no doubt sir, it is not a gift, I agree. but it is outward supply on which you are liable to pay the GST. So therefore, the option is one, you reverse the credit or pay tax on the gift given to the customer. The problem is, if you reverse the credit, there won't be any issues at all. If you want to pay the tax, the officer says, say you purchase for 100 rupees, why don't you add 10%? So you are liable to pay more. So therefore, you have to take a call. So here, the opening balance, receipt, supply of goods, lost, stolen, destroyed, write-off, or disposed of by way of a gift, or free sample, and the balance of stock. These stock details you have to maintain it. Every registered person shall keep and maintain a separate account of advance received. So under the earlier law, advances, under the earlier law, that is VAT and excise, advances are not subject to the VAT or excise. Under the service tax law, advances, you are liable to pay the service tax. Under the GST law, advances for services, yes, you are liable to pay from 1/7/2017. But advances for supply of goods, there is one notification number 66/2017 dated 15/11/2017. It says the advances are all exempted from 15/11/2017. The issue is here, up to 14/11/2017, you are liable to pay the advances received from your customers. Correct. This notification came only from 15/11/2017. So therefore, up to 14/11/2017, you are liable to pay the tax on the advances. For advances, you are required to maintain all the details from whom you have received, what is his registration number, what is the place of supply, name and address, etc. So these are all the details you have to maintain for advances received from the customers. And you are. In respect of services, chartered accountant services, if you receive advances, I know that you will not receive, but if you receive advances from the customers, yes, you are liable to pay the GST on the advances. So advances over. Then so you are required to maintain tax collected, input tax credit, availed, utilized, all those details. Every registered person shall keep particulars of name and complete address from which he has received the goods and services, name and the country address whom he has supplied the goods or services, and complete address of the premises, etc. Any places other than the declared places without the cover of any value documents shall determine the amount is taxed. If it is very important, if any taxable goods are found to be stored at any place other than those declared in the return, the proper officer shall determine the amount of tax payable on such a goods as if such a goods have been supplied by the registered person. Therefore, you must be very careful about your additional place of business. You have to incorporate in your registration certificate your additional place of business. Otherwise, if you store the goods, very easy for the officer, he will come and see the goods and he will ask you to pay the tax on those goods. Keep the books of accounts, principal place of business, and books of accounts relating to additional place of business also. And such a books of accounts shall include any electronic form also. Therefore, if there is any additional place of business, you are required to maintain all the details related to that. Any entry in register, accounts and documents shall not be erased, effaced, overwritten, or all incorrect entries otherwise than those of the clerical natures shall be scored out and attestation, etc. It shall be recorded and where the registered other documents are maintained electronically. So therefore, there should not be any overlapping erections, etc. Maintained by the registered person shall be serially numbered. Unless proved otherwise, if any document, register or any books of accounts belonging to a registered person are found at any premises other than those mentioned in the certificate, shall be presumed to be maintained by the said person. It is like under section 132, income tax. Unless proved otherwise, if any document registered, etc., found at any premises other than these persons. So agent is a definition. Every agent is not, every registered person manufacture goods, monthly production, this we have seen. temporary registered person shall on demand produce a books of accounts which he is required to maintain under any law in force. He has to give the details. So these are all, I think, not required much. The next important is the tax invoice. So if you go through the rule, it mentioned almost 17 items should be there in the invoice. Name, place of supply, supplier GST number, supplier address, customer address, her registration number, HSN code, tax, all those details, almost 17 details. The rule says it should be there in the invoice. So therefore, at any point of time, the officer says you have not maintained the 17 items in your invoice, therefore I will not allow you the credit. Correct? Because rule demands. These are all the details should be there in the invoice. Therefore, this is being represented to the government. I think the notification number 38, if my remembrance is correct, it says only 5 items is required to be maintained in the invoices. That itself is sufficient. Place of supply, GSTN, both the GST number and address, and whether it is IGST, CGST or SGST. These are all the details should be there. At least this money minimum 5 details should be there in the invoice. that itself is sufficient for you to claim the credit. So therefore, that is over. Content of tax invoices, all we know that. Manner of issuing the invoices, original, duplicate. Bill of supply. That's very important. Bill of supply means if I am dealing only in exempted goods, you are not required to issue a tax invoices. Or if I am giving to the customer is not going to claim the credit, and if the amount is less than 200 rupees, or the person is an unregistered person, then in such a situation I can issue the bill of supply. Not required to issue the bill of, I can also consolidate all the bill of supply in a particular day and then give only one report.
That is for registered person also?
Registered person.
Less than 100?
Yes, sir, less than 200 rupees.
Less than 200.
Yes. So, receipt vouchers, these are all normal. GST audit which we have discussed. So, I think with this I completed my presentations. So, thank you for all of your patient hearing. Any question you can ask me, sir.
Departmental store. Invoices, sir.
Departmental store. The other person is going to claim the credit if he insists you have to give tax invoice. And if the amount is less than 200 rupees and the person is an unregistered person, or he says that invoice is not required, then in such a situation you can give bill of supply.
Then you have to consolidate daily.
You can consolidate daily, sir. It is there in the rule. You can consolidate and give only one invoice also. You can prepare only one invoice. Consolidating the all, yes sir, yes, you can do that.
But I have to issue a tax invoice.
You have to issue the tax invoice. Even if the amount is less than 200 rupees, I am insisting on tax invoices, you have to give the tax invoices.
I am asking about cases where we are going to issue less than 200.
Yes sir.
And I am going to consolidate at the end of the day.
Yeah.
So that bill which are less than 200, the item should be tax invoice only.
Bill less than 200 rupees, that the rule says you are not required to issue the invoice, provided if you satisfy these conditions. The first condition is the person is a unregistered person. No doubt. You can then in such a situation also. Or he is not required the invoices, then you can consolidate. There is no necessity.
So we have some of the stationery items you are getting from our head office to branches. And they go through billing because of the industry.
You have to.
So, but those are consumed in our branch office. So can we claim ITC?
You can claim ITC. What is the problem? It is related to your business, correct?
And internal consumption.
It is related to your business. It is only a printing and stationery which is required for your business. So, creditor portavara, if it is related to your business and if it is not listed in 17.5, you can claim.
Center which is not authorized, probably unregistered one.
No, I didn't get it.
So service of car actually from a probably a unauthorized service center.
Okay.
In a private one.
Okay.
So in that case, I either he is registered and probably the guy who is actually servicing is also registered. So that GST will not be applicable.
Sir, both unregistered, what is your problem? You are unregistered, the supplier is also unregistered, what is the problem for you? No problem at all. Even if the supplier is registered and if you are availing the service of repairs and maintenances of your motor vehicle, you are not eligible to claim the credit because it is a blocked credit in section 17.5. Because if you go through section 17.5, it will start with the in respect of motor vehicle. So therefore my view is that insurance and repairs and maintenances, you are not eligible to claim the credit. If the amount is huge, then we can try, we can litigate. So otherwise it is not worth. No format is there. You go through the rule, whatever the detail is there, you mention it. Yes sir, you can prepare it. Yes sir. What you are doing under income tax law? In 3CD?
Same pattern as
Yes sir? Coaching institute. Okay. Okay. Is it a gift? If you take credit, you are liable to pay on the outward supply. If you reverse the credit, then you are not liable to pay on the outward supply. That's all. So better not to take the credit. Thank you, sir.
Good evening, all. Now let's all welcome our CA administrator on stage, please. Let's with a warm awards and a big round of applause. Thank you, ma'am. Thanks for accepting our invitation and being with us. It's my great advantage to take you through the brief introduction of our CA administrator. She is a chartered accountant and company secretary. To talk about her career, she delivered various training and ICAI certification programs on wide ambit of topics ranging from overview of GST, books and accounts, return filing in various states within India. Delivered training programs on GST for National Academy of Customs, indirect taxes for state and central tax government offices. Contributed articles for ICAI journal on GST impact on various sectors, GST impact on educational institutions. Penned down articles in GST newsletter released by IDTC, ICAI, It's Not Easy, Tribals of the Sector, Impact of GST on Automobile Sector. She has written articles for a reputed Government of India online media called Tax India Online on GST. She supported the complex supply chain management structure by studying various legacy applications and brought them up to speed to meet the GST requirements. Participated and exchanged views in the weekly meetings with the cross-functional teams and tax consultants. Some of her key achievements: proposed and implemented MIS from books, thereby ensuring timely presentation. So if you want me to go through this, it will take another 1 hour. So I will request our CA administrator to take over, please. Thank you all.
Thank you, sir. It's really a pleasure meeting you all. How do you all feel after a three-day program? Thorough with GST? Overwhelmed. Very nice. Okay, let me start with a story then. So there was a wealthy king once. Okay, so he was wanting his people to be active, and he wanted them to be living on their own efforts. So once he placed a big rock in the middle of the road. He was wanting to see who is actually moving the rock and who is just walking by just by complaining. So 99% of the population, I mean whoever crossed, was only complaining and moving on. There was one old farmer who came. He was a very old farmer, but he tried moving the rock, and what did he find? Anyone know the story?
Treasure.
Yes, he found the treasure. So every efforts will definitely give you some treasure. So I'm sure this 3 days program will definitely give you fruits. So how many of you are in the field of GST, are practicing? So you're all new practitioners. Okay. So so the amendments as such, I'm just giving only the significant amendments here. I'm not covering all the 100% of the amendments because it would have already been taught you in, discussed with you in all these 3 days. So I'll just discuss on the significant amendments. So my presentation would be based on the circulars and the notifications alone. I am not covering any return filing extension, date extensions or GST portal related stuffs. I'm not covering. I'm covering only the notifications and the judgments. So you can stop me in case you have doubts. I'm also learning. If in case I know, I'll tell you. Otherwise, I'll learn and then tell you. Yeah. So first we'll go through the notifications. So, so if you see the original GST Act, all the interstate supplies would be all the interstate supplies would have persons who are providing interstate supplies would have to definitely compulsorily register under the GST Act irrespective of the turnover. So what is the turnover limit? 20 lakhs, right? So irrespective of the turnover limit, they'll have to get a compulsory registration. But now there is a recent notification saying the persons who are providing interstate supply of services needn't register. I mean, if their turnover is less than 20 lakhs. Yeah. So what examples can you think of? I mean, what example can you think of here? Sir? Chartered accountants providing services. What came to my mind was the visiting faculties. I mean, if you have the IIT people who are based out of Bombay, and if they go to some other IIT to make a program, if in case they are visiting faculties and not on the rolls, not on their rolls, so irrespective of whether they get 20,000 or 20 lakhs, they'll have to register. But now this provision gives them a solace. Yeah. And then this is the most discussed provision, right, in GST. What is it? RCM, I mean reverse charge mechanism. So if in case there are any supplies that are received from the unregistered suppliers, okay, the registered person would have to pay tax. So what would happen in this case? Nobody will buy from unregistered persons. All the small players will die, right? So this provision was really hampering the small service providers or small service sector. Yeah, small sector. So this was really fought with this was really fought hard, and as of now we have got extension till exemption for this RCM. Exemption for this RCM till 30th September 2019. Actually, when the Act was originally introduced on 1st July 2017, another one notification on 13th October came in saying that they'll be, henceforth till 31st of March, there will not be any RCM liability. So, I have written it as 13th October 2017 to 31st March 2018. Sorry, there's a mistake there. It is 1st July 2017 to 13th October 2018. So what is the case between 1st July 2017 and 13th October 2017 is still a confusion. Not everyone are very clear. I mean, the law is also not very clear. So now is the season for GST audit, right? So you will have to give a clear assumption below. Whenever the Form 9 is being consolidated, you will have to give a clear assumption whether you have taken the RCM provision or you have not taken the RCM provision. So you will have to give a clear assumption before closing it. And you're all aware, right? There is there's an Amendment Act 2018. So it was a bill, but it became an act recently, but it has not been notified yet. So any act to be functioning should be effective. It should be notified. But this is not notified. There's a provision in the new act which is saying this provision will apply only to specified class of persons for specified category of supplies. So there is a breathing space now. So not everyone are liable for this unregistered supplies. You would have discussed about the composition scheme in the earlier sessions, right? So this is mainly for the small scale providers. So if in case a turnover is less than 1 crore, the turnover is less than 1 crore, they needn't pay the full tax. The full GST rate is not applicable, so they'll have to pay only a part of it, that is 0.5% of their turnover, of their state turnover. 0.5% in case of CGST and 0.5% in case of SGST. At the time of introduction, it was a different rate for the traders and manufacturers. Now it is a uniform rate, only 0.5%. This limit of 1 crore is increased to 1.5 crores in the Amendment Act, which is yet to be effective. So that increase has been done. So already for a provision to be applicable, you will have to have it in the Act. You will have to have it in the rules, right? So rules already provides for 1 crore. If in case the government wants to further increase it to 1.5 crores, there is no provision. There was no provision. But now CGST Amendment Act 2018 is now there. So once it is notified and the rules are also in that line, the limit will automatically increase to 1.5 crores. Yeah. And also the composition scheme was not applicable to service providers other than restaurant service. So in this new act, there is a limit of 5 lakhs. If you can provide other service also, other than restaurant service also you can provide, but that service limit should not exceed 5 lakhs or 10% of the turnover, whichever is lower. Yeah, the 10% of the turnover in the state in the preceding financial year. So again, they have considered our real difficulties and they have given effect to all these provisions, I should say. So the block credits under 17.5, this list is really huge, right? What came to your surprise originally? When the act was introduced, what really surprised you? Motor vehicles, yeah, earlier act also had that provision, motor vehicles. Yeah, you're right, motor vehicles was a very big surprise. And also the insurance, yeah, insurance, and also the food and beverages, right? See, if in case you have a factory, you will have to compulsorily give food to your employees, correct? But it was clearly blocked, it was a clearly blocked credit here. So, but now in the Amendment Act, I told you, the Amendment Act provides if in case it is mandated by an act and the employer is providing, then it is an allowable credit. So, you are saved there. Yeah, food and beverages. We were all grumbling about it a lot. Food and beverages being a block credit. I mean, in the earlier law also we were in a dilemma whether to claim it or not. There was a case law saying it can be availed. There was a case law saying it cannot be availed. But now here it is provided in the Act itself. So whatever I've highlighted, right, in the green, food and beverages, outdoor catering, beauty treatment, health services, health and fitness center, club membership, travel benefits to employees on a vacation. If all these are being mandated by a act and the employer is providing it, it is an allowable credit. All these 16 items were block credit earlier. But now we have some exemptions from it. And rent a cab unless employer is mandated under any law, which Which state provides the compulsory, which state mandates rent a cab? Any idea? Bombay, to my knowledge, women employees should definitely be sent through a cab in late working hours. So there it will be an allowable credit. But in Chennai, is an allowable credit? No, it's not mandated by any act here. So motor vehicles and conveyances, earlier this whole lot of motor vehicles and conveyances was blocked. Moreover, we had a debate as to whether the expenses on the motor vehicles can be allowed or not. But now the Amendment Act 2018 has clearly provided all the expenses on the insurance expenses, repair expenses, maintenance, nothing should be allowed as a credit. It is a completely blocked credit in case of motor vehicles. So you can't buy a car for your director and claim all the expenses. So that is not possible anymore. So, and also motor vehicles, whenever it is having a seating capacity of less than or equal to 13 persons, then it is completely blocked unless it is used for making an outward taxable supply. Yeah. So, any doubts on this? Sir?
You say that state which mandates it only is applicable. Then the concept of one country, one tax is totally getting defeated.
Agreed, sir. There are a lot of provisions which is defeating the very purpose of that statement. So this is not the only provision, sir. Agreed. I agree to your point. Yeah, can we move on?
The mandate is only by a different law, right? Or not necessarily in the GST law.
It's by a different law, by any law in India. I mean, in India, it's not in India, by any law. I can check that if it is in India or any law, I'll check that. But it is any law, not GST law. So again, there is an interesting provision in the Amendment Act 2018. So I'm just covering it, even though it is not effective, because any time it will be notified and it will become effective. So I'm just covering the important provisions in that also. So you are all aware that the aggregate turnover should not exceed 20 lakhs for all the states, and in case of special category states, it is 10 lakhs. So, but in this Amendment Act 2018, if there is a specific request of the special category states, yeah, if there is a specific request by them, and if in case it is being recommended by the council also, both should happen. The turnover limit can be enhanced from 10 lakhs to 20 lakhs. So as of now, do we have any provision to amend the returns? We don't, right? So, but under the new act, it is possible, but don't ask me if it can be done on the GST portal, I'm not sure. It will take some time, but the law provides for amending the returns. And as on date, you cannot issue a consolidated debit note or a credit note for a single invoice. I mean, by linking it to a particular invoice. So each invoice should have a different debit note or a credit note. You cannot consolidate it, but the act provides for it, and the portal will also provide for it, I hope.
So right now it is not possible.
It's not functional in the portal, and it is not specifically provided in the act. Now it has been uprightly specified. Earlier it was not saying you cannot. The act was not saying anything, it was silent on it, but the act now speaks for itself.
So but if in the accounting system, if we can still do it, I mean, is it...
No, you can't do it in the GST portal. To my knowledge, that functionality is not working as on date.
What I'm asking is, so if I have multiple invoices to a customer and I'm issuing a credit note back to the customer, the credit note value is within like one of the invoices, so it's the value that matters. I don't think we have to go to the line level for the credit note, right?
You're absolutely right, and that was a practice in the earlier tax regime also. But now we go more by the GST portal rather than by the law. Only if the portal allows, there's no manual filing nowadays, right? So you'll have to go by what is existing in the system, that's all. So as on date, that functionality is not there. By law, it is not saying that you cannot do it. But
maybe we'll take it offline. I'll just talk to you.
sure, yeah. So whenever you receive advances, whenever you have to receive advances on goods or services, yeah, you'll have to pay GST or not.
Only for services?
After this amendment, it is only for services. For goods, it is being allowed. But how about the input tax credit for services? Input tax credit can be claimed if in case you give advance for goods, advance for services.
No.
Only on receipt of the goods you will be able to claim it.
Tax invoice should be.
Yeah, very good. You have all been really aware throughout 3 days. Very good.
So this is already there on the notification, right? With regards to the advance on goods.
Yeah, if it is a notification, then the law doesn't specifically stop from getting it as getting the provision.
So it's not going to be a part of the law itself, but notification has already been.
No. This is a notification.
Okay.
Whatever I mentioned earlier was only the. I'll mention it specifically if in case it is the act. This is the notification. So in case of e-commerce operators, the service providers, it was mandatory for all the service providers to register if in case the services are being made through the e-commerce operators. But now, if the aggregate limit is within 20 lakhs, they are exempt from taking registration. And 3Cs is also not there. So, from when is the TCS provision effective? Tax collected at source. From when is it effective? Very good. Give him a huge applause. 1st October 2018. So, the e-commerce operators, in relation to that TCS, needn't take registration, and hence there's no TCS liability. Yeah. So you had a session. You had a discussion on TCS. Okay. So the handicraft goods. Casual taxable persons who are making interstate supply of handicraft goods are exempted from registration if their turnover is less than 20 lakhs. These are all notifications. I'm just moving on because there's nothing much to discuss on this. So you must be aware by this, sir. Yeah, 29 plus some 31 items. Yeah. Yes, only if it falls under that particular list. There are some 28 plus 31 items, I suppose. Two categories are mentioned under that. Not all goods are exempt. You're dealing with that, sir? Okay. So, how about this HSN? You must be aware by now, right? So when according to the turnover limits, you can shorten your HSN. Yeah. So how many items are there? I'll keep this slide and ask you. Yeah. How many items are there? How many particulars, invoice particulars are there as on date? 17, right? Huh?
5 is also.
5. No. As on date, 17. All the 17 particulars should be there for you to claim the input tax credit. But now, under the Amendment Act 2018, it's mentioned if these 6 items alone are mentioned, it's sufficient for you to claim ITC. So, amount of tax charged, description of the goods, value of the supply, GSTIN of the supplier and the receiver, and place of supply in case of interstate supply. If these 6 items alone are mentioned, it is sufficient. You can claim the ITC. Any doubts? So I've taken the important notifications and I've covered it. Now we'll move on to the clarifications. So who is a casual taxable person?
Person who does not have registration in that specific state but wants to make taxable supply in the state. So
Very nice, sir. Excellent, sir. So you must be aware that there is a deposit that is required for if in case you are taking casual taxable person registration, right? That deposit should be 100%. That 100% is 100% of your gross liability or 100% of your net liability. I mean gross minus the available ITC that you might claim. It's a net or the gross. Which amount should you deposit originally?
Estimated gross turnover, estimated tax you have to pay.
So you're saying it is a gross tax liability. So there is a clarification which is saying it is a net tax liability. The reason is GST REG 1, which is that asks for the registration details and all that. So it seeks for the information of net tax liability. So that is the basis on which they have given this clarification. It is 100% of the net tax liability. So there is a limit of 90 days for a casual taxable person to operate in a particular state, and it can be extended by the commissioner for another 90 days. So totally 180 days. What if I run an exhibition for 182 days? Can I get a casual taxable person registration? Yes? No. Yes. I'm sorry. You cannot. You cannot claim. Long running exhibitions will have to have a normal registration. But there is a small solace here again. You can give the allotment letter or the consent letter that you are having for running the exhibition for the document for place of supply. Yeah. So and also there is for the normal registration you needn't pay any advance tax. But since tax authorities are giving a clarification, they want to beautify things and they are saying no requirement of paying advance tax. Yeah. And you can surrender the certificate once it is over. Yeah. So you're all aware of the input service distributor provision? Input service distributor. So that input service distributor will do only the job of distributing the credits among the branches. So what if he distributes a credit wrongly? I mean, instead of you, I distribute it to her. She is enjoying much credit and you're suffering. I'm not bothered about you, but you're enjoying a lot of credit. What can I do for that? I am the tax authority. So what is that you're doing? What is that they're saying is you will have to pay back that excess credit with interest. And also because the IST has done a fault in this, they will be subject to the general penalty under 122. Yeah. This I already discussed, I suppose. So is e-commerce operator liable to collect TCS in case of supply of services by unregistered person? I want to know how many of you were aware some 2 slides before. So if in case if in case this unregistered supplier is making supplies through e-commerce operator, yeah, is the e-commerce operator liable for TCS? அப்ப யாருமே கவனிக்கலையா? Super sir. Yeah. If 20 lakhs turnover limit is not exceeded, then there is no requirement. Excellent sir. Your good name? Yes. So is registration of e-commerce operator in every state listed on e-commerce platform mandatory? So if you see Amazon or if you see Flipkart, you'll have all the states listed there, right? So whatever states they have listed, is registration mandatory in all such states or they can live with one state? What do you say?
All the states.
All the states. So there is a clarification again here. If in case the e-commerce operator has a physical presence in that state, registration is mandatory. If in case there is no physical presence, head office can can be treated as a place of supply. So how about the foreign e-commerce operators? For foreign e-commerce operators, will TCS provision apply?
Yes, they have to appoint a person in representing e-commerce operator.
Very nice. So it is applicable. So if in case there is no physical presence, an agent will be appointed in that case. So I haven't put the animations here, so I can't question you a lot. So in case of the composition taxpayers, you don't have the e-commerce operators to you can't no composition taxpayers can supply through the e-commerce operator, so that provision will not be applicable at all. No question on that. Yeah.
Amount interstate supply.
Yes. So no, even if it is done through even if it is intrastate, and you cannot do it through an e-commerce operator. So how about the multiple e-commerce operators? Don't look at that slide, look at me. Huh? If there are multiple e-commerce operators, who will pay pay TCS? Who is liable to deduct TCS? So it is a person who is making the final payment to the supplier. Yeah. So I told you, right, the e-commerce operators are, the TCS provisions are applicable from 1st of October 2018. So there are some people who were finding difficulties in getting registration by October, but they have deducted TCS. How is that they are going to deposit this on the first return after registration? Yeah. So this T Board of India, it's operating in the structure of a e-commerce operator. So how if you ask me, it is like they give an online auction. Yeah. And there are people, there are auctioners who are getting the who are getting the buyers, and there are also suppliers. These suppliers. So the amount that is received by the Tea Board of India will be a consolidated amount. It will be the auction charges plus the value of the tea. So it is a consolidated amount, but they will make the payment to the supplier separately for the tea, and charges separately to the auctioners. So this is almost like a e-commerce operator structure. It is a e-commerce operator structure. So TCS liability will be applicable for this. So for the value of the tea that they are supplying, the TCS would have to be collected from the suppliers, and for the auction charges, they'll collect it from the auctioners. Yeah. So Schedule 1 talks about the principal and agent relationship, correct? So it talks about the principal and agent relationship for goods or services or both.
Only for goods. Service cases, there is no need for principal agent relationship.
Very nice. So services is not covered under Schedule 1. So if in case there is no consideration, but can you still treat the services received by the principal on behalf of the agent as a supply? What is Schedule 1 first? Supplies made without consideration will still be treated as a supply, right? That is the schedule. That is a schedule. So will the services received by the principal on behalf of the agent be treated as a supply if there is no consideration? Yes? Yes? Why? Why? See, that's why he was saying, whenever the principal is receiving the goods on behalf of the agent, or the agent is receiving the goods on behalf of the principal, only then Schedule 1 applies. So for services, Schedule 1 is not applicable. So Schedule 1 doesn't cover the principal and agency relationship for services. So agent should not be only a namesake agent. He should really wear the representative hat. That's what the clarification says. So you have all heard about the del creditor agent, right? Who is a del creditor agent? One who takes the responsibility of receiving the payment also in addition to doing the agency function. Yeah. So, is that del creditor agent an agent under Schedule 1? He is if the invoice is in his name. Otherwise, he is not an agent. So there is a short-term loan that he is offering to the customers to make the payment on time, right? So you would have read section 15, which says, which includes everything under the sky, right? Will this interest portion that the customer is paying to the del creditor agent will be included in the value of the supply between the supplier and the customer? Interest the customer would be paying, right, to the del creditor agent. So will that amount be included in the value of the supply? In the first transaction, there is a supply that's happening from the supplier to the customer, and the customer is settling the supplier based on the short-term loan that is being received from the del creditor agent. Is that interest portion paid by the del creditor agent to be included in the value of the supply?
Because price is not the sole consideration in this case. So
Yeah,
yes, it is.
correct. You're right. Price is not the sole consideration, so it should be included if the del creditor agent is an agent. If he is not doing the agency function, that interest portion needn't be included. Any doubts? So you have this time expired goods concept in case of drugs, right? You will not use a medicine beyond the expiry date. So what will happen is a retailer will return back the medicines to the manufacturer. So can this return claim ITC benefits? So there are actually two ways of this transaction. One is the return can be treated as a fresh supply, or the return can be made through issue of a credit note. Yeah, when this return is treated as a fresh supply, there are various options that are being discussed. The person who is returning, the retailer, can either be a registered person, then he'll do it through a proper invoice. In that case, if in case all the conditions there, you remember all that conditions, 180 days payment. So if all those conditions are being satisfied, then you can claim credit. Otherwise, you cannot claim credit. If in case he's a composition taxpayer, the person who is returning the goods, the retailer is a composition taxpayer, it will be done through a bill of supply. So there will be no tax included in that. He'll have to directly deposit it with the government, right? I told you 0.5% for the manufacturers and retailers. So that amount will not be included in the invoice itself. So no credit is available there. So if in case a person is
even then ITC is not available for composition.
Yes sir, when the tax amount itself is not there, where is the question of ITC? So there is no question of ITC at all. You're right. So in case of the unregistered person, if in case a person is an unregistered person, then also he cannot charge GST. So no question of claiming it again. So once the manufacturer receives the goods from the retailer and the goods are being destroyed by the manufacturer, or there is a accident or a fire that's happened in his premises, then he'll have to, if he had claimed it, he will have to reverse it. So again, this is one part. I mean, if the return is being done through a fresh supply, that is the case. If the return is done through a credit note, what will happen? Is there any time limit for issuing credit notes?
Before the month of September.
September? I think you are very thorough in GST. You are answering all the questions. Yeah, September following the end of the financial year. So if it is July 2017, if the original date of supply is 1st July 2017, and if the date of return is on 20th September 2018, then what can happen is you can claim the credit for this. I mean, whenever you are charging tax originally, the retailer will also charge the tax and send back the goods, right? So you'll have to reverse the goods, reverse the ITC. only then you can claim the ITC now. So the time limit is still there. For September following the end of the financial year is still there. So you can claim ITC on this credit note. If in case it is 20th October 2018, the time limit is crossed. So you cannot claim ITC on that. So you needn't mention it in the GST portal also. Yeah, can I move on? So this Mahatriya or Isha Yoga, they all conduct this residential program, right? Yoga camps. They charge some 30,000 for 4 days, I think. Yeah. So is that part liable for GST? Amount charged for residential camps for yoga programs. Is it liable for GST?
Yes, it is. The primary supply is the teaching.
So it is, you got the reasoning right, but the answer wrong. So since the primary objective is yoga program, it is exempt from GST. Yeah? This is in line with the composite supply provision. The principal supply is yoga only here. So it is exempt. So if in case the fitness camp, if the main purpose is fitness camp or aerobics or dance programs or all that, then you'll not have any exemption allowed. I'm within time, right? No problem. Yeah. So I see a lot of people moving on. So if in case the industrial training institutes are providing any training, is it liable for GST or not? So if in case it is under the designated trades, I mean if it is under the Apprenticeship Act, then it is exempt. Otherwise, it is liable. This is in case of the private institutions. In case of the government institutes, it's completely exempt. Yeah, any doubts? I'm done with my session.
Can you explain that e-commerce operator provision and elaborate?
Yeah, sure. I can take it offline. Yeah, I'll come to you. Yeah, thank you for the opportunity.